Good morning, my friends, and welcome to the ThetaWave Trader. This is the Breakfast Club, and here we are on a Tuesday, the 20th of March. And I hope you guys had an awesome couple of days. The markets are being nice to you. I see that Hans is off to a good start this morning. So congratulations, Hans. Let me move this down so you can actually hear my voice a little more. Congratulations, Hans. Good work. Good work. I am going to, first of all, double check, make sure we're on line here. And we are. And who's the first through the door today? Dave Barry. Good morning. Welcome. First guy through the door today. I had fun the other day, Dave. That was good. I kind of enjoyed that. We might have to find an easier way to, instead of sending like a ton of text messages back and forth on the channel there, just kind of open up a quick little conversation piece. I think you can open up a community tab so people can just jump in if they need to. And we can talk about, in the after hours, we can talk about stuff like Bitcoin or whatever we're interested in. It's usually just for a couple of minutes if we're into a trade. We just lucked out that day. My wife was on the phone with somebody. So I snuck in here and got on the trading right away. The Bitcoin was giving us some good trades there the other day, Dave. So thanks for that. Okay. Young, how we doing? Lewis. Morning from South Africa. Morning, Lewis. Morning. We're about to start. I don't even want to look outside right now. Yesterday all the snow was almost gone. And now we've got 3 days of continuous snow. 3 days of continuous snow. That's not going to be fun. Not going to be fun at all. Expecting almost a foot of snow, up to 20 centimeters. So I guess that'll be 8 inches or something like that, 7 inches. It's a lot of snow. They get the snow blower out yet again. Okay, so I quickly go through my morning run through these markets. Let me give you ES to get started. We had a nice reversal here on the 2 minute. Why is that on 2 minutes? 1 minute. Had a nice body finally break through this and did not come back to it. Anyway, what are we looking for? So we're in the rejection block up top here now. So now you expect it to pull back into this little range right here, 52.13, 52.16. Run back into here at least. If we run back from rejection block to rejection block, one candle. I'd like to see it just get back into here before running back up. So if we put a wick in here, come back and then start running up in the afternoon for these old highs, that would put us back into this level here. Look for this old high here at 52.18. Some people might say, oh wait a minute, that's ripping up, that's going higher. It certainly could. It certainly could. Right now we're in a consolidation from a 15-minute perspective. We just ran out that little highs there. So for me, this is like a cam 1, cam 2. Price is digging back in here on the 1 hour. Yeah, I think this is going to return back into this fair value gap below us here. we've already hit the rejection block. Pay yourself at the rejection block. This run back up yesterday into this rejection block. Stops, does not take the highs. Return back into support. So this might actually be a nice one for a run back down today. So look for those reversal patterns above old highs that give you the run back down. Yeah, so I think this is might get a decent run today into here, or even back into the consequent encroachment of that inversion fair value gap there. And you're just waiting for an opportunity to start moving your way back up. So if you didn't get in this, don't sweat it. If you can find an opportunity to get in off of a breaker, like right here, this breaker right here, return to it, continue down on the downside. Looking for that area there again. Don't go rushing into something that's not your ideal setup. Okay, so we have, turn my screen a bit here. It doesn't have to be that far over. Dixie. What do we got for Dixie? Okay, so we've run through this fair value gap on the upside. We didn't get a retracement back into it for our swing pattern. We did get this one here though. We ran above it, came back into it right here on Monday, or sorry, Thursday? Monday, Tuesday. Yeah, Thursday, ran back into it, hit the top of it one more time, cleared out our fair value gap, and now we're looking for a run back into here. The mean threshold is being traded through. We do have the rejection block has just been hit. So for me, I'd look for a nice little reversal in here. And then you can look for your currencies. Look for a potential swing point that occurs sometime this morning. If the rejection block, which we've seen so many times now, it just hits that and bounces off it. If it tends to run through it, look for a run back up into that fair value gap again on the daily, which is now an inversion. And then we've got some really nice downside when this thing finally lets go on us. So that's giving us some downward pressure on gold probably. So in here now that you're running for these objectives, you kind of, because it's a higher time frame, you're looking for a lower time frame confirmation of a turn. So at any point, so today you're looking for this one, the 50% of that wick, all the way to the top, just clean it out and start your turn. That means that will affect your foreign currencies. So look for your foreign currencies to make turns around, that could be 10 o'clock run up into here. Yeah, keep your eye open for a reversal now. We're starting to reach where you might think the high might be, right? So instead of trying to predict the high, wait for the high to form, wait for the rejection or the reversal to occur, and then come back into the trade and take it short. And then use your fail-safe if you have a fail-safe. And you're welcome to use the one that I've been showing you guys. We have a body break through it here on the daily. We don't even get back into it, just shy of it here for a continuation on the downside. We were looking for this fair value gap yesterday, and it looks like we just clipped it. Perfect. Snap back. Now we're looking for another dive down. If the American dollar does take a run on its highs, look for this mean threshold and rejection block, and then look for, yeah. Right now I'm just looking for a fill of that fair value gap would be nice. And then this breaker here. See if this breaker holds price. If it holds price, look for the mean threshold, your line in the sand. Or 126.38. 126.38. So while you're in your hourlies, look for a final up breakout that supports price to the upside. So here's your reversal. Let me just show you this one real quick so you guys get the idea of what you're looking for. You see this in GBP at 3 a.m. this morning? Is that 3 a.m. today or yesterday? Oh, yesterday. There's your reversal. You've taken out some lows. You come to this point here. So that was the fair value gap we were looking for. Just dipped in there. Fair value gap forms. Body closes above it right here. Then we trade back down to it right there. And then you're off to the races. You clear out a little bit here and a little bit here, a little bit there, a little bit there. And you've got the reversal. Here's the reversal here. The body trades below it right here. And you trade well back up into it. Stop losses here. Well back up into it. And you continue all the way back down to the same one we were just working on. Those are your perfect entries for British pound. That's the kind of stuff you're looking for. So you're looking for these reversals. And then when you see a reversal here and you've scaled out, like I've been telling you 100 times, pay yourself at rejection blocks, then highs, rejection blocks, then highs. Try and be really committed to that, because you're going to find that if you didn't and you're just aiming for these old highs here and you're just like, oh, it's coming back up here, you just got chewed all the way back to your entry and you're actually underwater if you entered in here. So that's too painful to wake up to. So pay yourself and then use your fib tool. So once you're in, pull your fib tool this way and then just start scaling out on the way up. That's another method you can use. We've talked about that in the past as well. But as soon as this reversal happens, there's your confirmation. You'd be like, I'm out. The moment a body breaks that candle, that's like your trailing failsafe that we've talked about in the past. If you have a trailing failsafe, it's tripped right there. As soon as this body trades below it, it opens. If it shoots back into you and gives you a little bit more, all the time it's going up, take your profits. And if it hits the rejection block one more time, you can, that's, because you've got to be really snappy to see that one. And then get out, because you know that it's already traded below that low, so it's heading back down. And then if you're back into this, you're going to trade it short back into the one you just went in going long. So you're trading between this one and this one. And if they're super close, you have to decide whether or not you really want to trade something that's such a small range. But that would have been worth $29.94. $34, 40 pips that way, and another 20 pips back this way. That's a 50 pips just in the, that's it. That's your week done. According to Michael, all you need is 50 pips for the week. You're done. And your setup was clean. Your entry was clean. Your drawdown was practically nothing. This would have been your drawdown had you been going short right there. If you go short, if you would have put your short on up here, right close to where your failsafe's going to bring you back to neutral, then it would have come all the way back up, tripped all three trades in for a short, squeezed you, stop loss is sitting here, then snapped back on you, and then continued giving you some profits all the way back to here. So there's a fair value gap sitting right there, full fill. If that's your downside objective inside a breaker, you just nailed it. Literally from that entry there at 23 down to 85. So that would have been 42 handles. 42 handles. Or 40-ish handles. Anyway, let's look at Euro. Euro's coming back into this breaker again. Getting some support off of the breakers open. Daily fair value gap. You may run down into this one more time. Mean threshold. See if that holds price for a reversal. Look for that reversal pattern down in your hourly, whatever time frame you're working on, 4 hour, 1 hour. Wait for your setup to form and drop your entries. So you're just looking for that reversal pattern to happen now. Same with CAD. It's finally run out its highs. That was yesterday, ran out its highs. Came back up in here one more time. Look for a reversal pattern to happen right here. See that? See that swing high that we had yesterday, taking out the old highs? As soon as the body breaks below this low here, you have 1, 2, 3 entries right there. So you're inside the entry pattern for a short. So an hourly, you could drop your trade in. You're still dropping in one trade here or one trade here to go short. Stop loss would go here. I would move that from there to there, and you wouldn't want to see that break that high again. Usually if it closes above, you say, I'm out. It reverses back, gives you your out. That's your fail safe. So then wait for a new setup. This is a pretty big one here. So if American dollar does run up a little higher than as what we're expecting here, if it does run up into this fair value gap and revisit this rejection block one more time and push through harder, then you're looking for a higher price on the Canadian dollar. That might be your indication right there that we closed above. This is just a retracement back into order block, push through. If this order block gives way on the upside, mean threshold, look for this order block above you here, which is a breaker. Look for that breaker to give way. If it doesn't, then you're back into this consolidated area again and wait for a decent setup. You have to see a swing taken out for your setup to occur. Well, New Zealand dollar sure did a run down on its lows. It's digging deeper into this breaker. We see right here. Where are we going from here? Again, we're looking for the big reversal in Wednesday's low. This could be the day you guys catch yourselves a tiger by the tail. Look for your setups occurring at the 10 o'clock open today, or the 9:30 open and the 10 o'clock. Look for your setup. If whatever your setup is, look for that particular setup. There's a lot of opportunity. I see it out there all over the place today. Back to the breaker. Mean threshold, the breaker's holding. Price is holding. So I would like to see this inversion here in Aussie dollar. If you're in Aussie dollar. See how we're hitting the bottom of it and snapping off of it? Look for a reversal pattern to happen. So if yesterday's low was the swing, look for, there's your inversion or your reversal pattern. Did we trade above it? Yes, we did. Right there. It comes back to you. Comes back all the way back to filling it in perfectly. Take the high, pay yourself. Rejection block, pay yourself. Comes back down inside it one more time. If you're going to pay yourself inside this range, pay yourself at the order block. These are hourly charts, so you should be making some decent coinage here on these charts. And if you're looking for these long bombs and stuff, you're not getting them right here. You may get them once you said, well, I'm going to weather the storm. But if you're doing some quick sniping and you're watching from PD array to PD array, you should be taking some off right there if you're inside this range. There's a fair value gap there. You're in the bottom half of a swing point and a swing point, and you're coming back up into a order block. So take it. Take your fair value gap. Give yourself some money there. Move your stuff to break even and wait. If it comes back in, great. Reload it. So it hits right here, and you go, oops, it's now traded below that fair value gap. So what's my fail safe? The moment it retraces back into me, provided it doesn't take out my low, whatever method you're using in here to manage your fail safe, you'll say if it doesn't take out that low again, then I'm going to wait for it to come back, and as soon as it hits this level, I'm out. Because you layer in 1, 2, 3, or if you want your fail safe to be perfect, you always put your buy order in down here. So you caught this guy here, you paid yourself up there, you move to break even. If it comes down, takes you out, you say, okay, I'll wait. If it comes back in, I can go long. Either way, let's just say that you were still here. You entered in again here. It took you down, and you go, oh, it's closed below my low. That tells me we're probably going lower. If it returns back to my order, I'm getting out. All the time it's moving in an upward direction. You say, I'm out. So you have 1, 2, 3 hours to wait for it to finally come back to you to get you out. You have to have the patience to manage that if you're trading on an hourly basis and you're using the fail-safe to support you. If you're like me, you need the 1 minute chart to play in. Don't make your decision on a 1 minute chart for that. If you're on the 1 hour, stay on the 1 hour. Michael's mentioned that many times. You can use the other time frames to manage your direction. But if you're opening this, you're trading this on the 1 hour, that's where you have to stay using those rules. Because what looks like a down run here could be an up run on the 1 minute chart. We'd just be retracing back inside that hour. Japanese yen, look at that, finally took the highs out. That was the American dollar's big old run up to the highs, finally cleared out that. Don't tell me we're running for that weekly high out there. Is that weekly? Yes, it is. We're looking to run out these weekly highs finally. This would be a really cool time to see a big ass reversal starting to happen. Oof. This could be the start of the April into May run down in price. Or this is the, what is the seasonal tendency for the Dixie? Oh no, this could be the run up. We're in March. It's usually mid to late March. Yeah, this could be it. This could be March, April, May. These could be just like continuation on the huge upside run here. Let me just check for seasonal tendencies. Seasonal tendencies. US dollar. March. So March does this run up, then the run down. We're into mid-March. So this should be typically a run down. 33-year tendency. This is back in 2018 though. So we should be seeing a run down into mid-March, a little run back up. That might be taking out the highs we're looking for. And then into the end of March, into the beginning of April, we should see the big run down into Dixie. That's what I thought we had to see. I wasn't. The foreign currencies we should run up higher. Okay. So look for that hourly or the weekly one right here. I'm a little slow on my chart reading this morning. Sorry. What am I trying to do here? I'm trying to say visual order. No, I'm looking for intervals, all intervals. Okay. So look for that high. Hopefully get taken out and look for a reversal happening up there. Oil. Nice little run on oil. Finally breaking out above the high. We wanted to come back for fair value there. Didn't quite get it. Okay, return back into this order block. Look for a reversal. Here's your reversal. Below that low, right here. If you don't get that one, look for this one. Run above. Come back inside. Get long. Your high's been taken out now. We have this inversion right here, so we have a potential pullback into a discount array here. So I want to see this. From here, I want to see it come down. Then up, and down. Somewhere in that, like that kind of thing happening. We revisited this here, so looking for more downside. Now we've taken that out. And I don't see anything here, so you're looking for... So you're using your fib tool to scale you out on the way down, so 50, 62, so on and so forth, back into this discount array down here, inside this range. Look for 50 though. Looks to be thinly traded in here. Gold. More downside pressure on gold. There's your reversal pattern right here. Body trades below it. We trade back up inside it right here. You got yourself a tiger by the tail. And we got some days, 1, 2, 3, 4, 5 days of trading down. So you have a perfect entry here. You just got a small drawdown in gold. Stop loss would be sitting up there. The moment we broke that low again, I'd be moving right into break even. This would be a zero stress trade right now if I was in gold. And you use your fib tool. Look over here, there's an old high. See how we just keep banging on that? New York open. So looking for more downside pressure. As the American dollar climbs a little bit higher, look for some more downward pressure. Use your fib tool to scale out on the way down for that. Silver. Man, do we ever call the high in silver? Right off that order block. The return back down now. You want to see this little area right here. See that right there? You want to see that give way with a body, come back, find support at it, continue through, eating up this order block here. And looking for further downside prices. But initially, the rejection block, look to pay yourself there. Look to pay yourself here, here, and here on a silver run if we get below this point here. Obviously, you'd be starting to pay yourself. So if you get in on that point, wait for the next point to start paying yourself here. Old highs. Yeah, I like a little bit more downward pressure back into this order block here for silver. Copper. We have our swing point, fair value gap, body trades below it, trade back into it right now for a short, back to old lows or old highs here. look for the fair value gap. So you've got this here, midpoint, old highs, close. There's multiple PD arrays in here. Make sure you play them according to, because you're right in the rejection or the low point of this. You're just into the bodies. You're not in a rejection block. You're just looking for this wick down here now. That would have been a nice entry there. I'd move my stop loss, slam it right up against break even on there now. I wouldn't want to see that run back up in the daily. I want to see that continue down. And who is in commodities? Back to a Cam 1 model. We popped into Cam 2. Actually more like Cam 3. So there's consolidation. Leg that takes out the consolidation, run back up through. There's your Cam 1 model entry, run for highs. So that's a perfect Cam model entry for wheat. Take out the highs, come all the way back down. Now that you've taken the highs out, I start to lose my love of these going all the way back up again. But if that's your idea, all the money you've made on this is going to back you up for your stop loss here. As soon as that finishes up there, which it just did, look for a long stop loss goes here. We get above this candle, look for scaling out here, and then back to that order block above you, this consolidation. And if it eats up more than 50% of that on a close, get out on the hourly. That's all I'm seeing right now. I could spend a lot of time playing around in those ones, but you get the idea of the reversal. That's the first thing I look for now. Now let's get back into here. I'm looking for this upside here. This fair value gap on the upside. Swing point. Here's the reversal. Here's a reprice, rebalance. Is that a reprice? No. There's a little imbalance right here. Look right here. See that little fair value gap? Right here. Run back up. Inside it here. Snap off. That little guy right there. Yeah, no, it looks like I'm form fitting it. This isn't a swing below this low, but this guy right here is swing below there. So I do like that little imbalance. Stop loss goes here. Yes, you're going to have to weather some stuff. And then when it finally kicks in, you're running for rejection, high, rejection, high. Look for higher time frame order blocks. If you've still got portions in and you can scale it out, you scale out all the way up to here, take out the high, it reverses on you. There's the reversal. We've just now got a body going below it. If you're a wick person and you say, well, the wick broke it, I'm good enough for that. I'm not a big fan of that, but if that's your wick through, then you come back up, you buy, you got your 3 buyer entries, your stop losses up here, and you're scaling out on the way down, all the way back into that fair value gap there. If it continues through, look for rejection block below and lows. How's that? That's my start to the day. Ugh. No coffee. I'm holding off on coffee today. I'm trying to go with water. As you can tell, I'm not very, very awake this morning. There's a lot of lack of lusterness in my energy this morning. Holy, look at all these people. Dave, Guillaume, Louis. Christian, good morning. Audio kind of low. Oh, is my audio low? Sorry about that. Can you hear me now? Or was it just because I have my microphone too far away? Testing 1, 2, 3. It's minus 30. Somebody was complaining about the fan in the background, so I was trying to cut out the fan. Can you hear the fan in my computer right now? Let me know. Jim, good morning, everyone. Good morning, T, ThetaWave team. Morning, Lambo, Glenn. Good morning. Follow the rules. Good morning. Richelieu from Russia. Good morning. Spartanberry. Happy Wednesday. Sup, homie? Lobo Del Cash, my friend. Cheryl. Good morning, Cheryl. Don't forget to hit the thumbs up button, family. Thanks, Thomas. Fernando. Good morning, Fernando. Tristan, good morning. Julian, don't think dollar could go down to its 4-hour BISI below price because it hit a daily rejection block following the PDA matrix. Yes, yes, my friend, it certainly can. Look at this. Get excited about this. You see this kind of juicy rundown, you think, oh, just give me a reversal. Give me a nice, tasty reversal here. You get back up above these relative equal highs here. So you were saying Dixie, and you're talking about 4-hour. Let's look at 4-hour. We're getting into the rejection block. Nothing's telling me that on the 4-hour that we've got a reversal happening yet. If we get a body above this order block here, this one's inside this one, so you take the larger one. It's a rundown on the stops here. If we get a body above that and come back, find some support at this, we could be pushing for higher prices for sure. We could be looking to dig that back into that fair value gap we mentioned earlier. So no, I don't see a reversal just yet on the 4-hour either. We've come back. If you come back and tap this high here, look for further upside. Whatever. That 15 minutes. Yeah, I don't even see anything on the 15. I just see a consolidation with the CAM 1 model coming in for a long, unless we do a manipulation and then drop down, come back into a CAM model 1, 2, and 3. Tony, can't hear you. Top of the morning, Darren. Top of the morning. Is this FOMC news a high impact news event? FOMC. Well, it depends on what you consider your high impact news events, but typically anything that was orange or above I consider medium to high impact. And the news released today is FOMC is a high impact news event. Yes, yes, it is a high impact news event. Opening. Good morning, Darren. Al Musi. Good morning. Julian SMT. Victor. Buenos dias, my friend. Zach, morning. Looks like you didn't get enough sleep. I got some great sleep last night. I was feeling a little tired this morning. I had to use my alarm clock. I'm usually up right away, but I had to use my alarm clock to get up because I have to have a shower. I have to get ready. I have to put all my rubber bands on. I have to get all the tape, pull back my skin. I have to do a couple of push-ups. It's a lot of workout just to get in here and get on the screen, you guys. Joselle, good morning. Opening range, close. Good morning, friends. IBOM equal lows, New York, right? 15-minute audio and fan are fine. Afternoon. Thank you, Carol. Good morning, Harry. All right. So my audio is good right now. You guys can hear me okay? All right. What are we waiting for now? Somebody sing us a song or something. We're waiting for a reaction. We're waiting for something. See how we're right in the middle of these two ranges here? Like, you couldn't be asking for any nicer equilibrium than where we're sitting right now. Right between these two premium and discount arrays inside this range. You see that? Premium, discount, we're sitting right between the two. Not in the absolute mean threshold. Or, sorry, the equilibrium would be somewhere in here. Let's find out. Let's find out. 50% sits inside here. So you and below you. So we're waiting for something to happen. And we had a really nice opening here. Ran the high. Did anyone do a turtle soup here? If you caught a turtle soup above that, bold as brass you were. And you just caused yourself a big dive down. So that was a nice little 70, 80 handle run. We got lots of snow today. Holy smokes. It starts today and just goes for 3 days of just slow, steady dropping snow. And with the sidewalks are perfectly clear. You could go for a walk. You don't have to worry about slipping and sliding and tearing up your back surgery. It's weird, you know, you look at the old people out there and you say, you know, you can understand why being on slippery surfaces, they start getting nervous about it. Have 4 back surgeries and then look at ice the same way you used to. And I used to jump around on ice. We used to do ice rescue, get my wetsuit on, like crazy. We'd all get in a big ring and we'd jump up and down and the ice would be like super thick, but we'd be pounding away on it. And then as a big massive group, we'd all just go woof and we'd fall through. But the ice would turn, these big chunks, and they just rake up your shins as you go through. You're like, ah. But as soon as you hit that water, man, it's like, woohoo. Then you have to do self-rescue. You got your little rescue tools, or you have to try and put your hands out there, kick your butt back. And then we have to do the ball throw in there, haul people out, and use our little rescue boat. It was tons of fun. My wife's on the sidelines watching. She's like, I can't believe those guys are out on the ice jumping up and down, trying to fall through the ice. That's back when we were dating. I could be a tough guy then. So she'd sit there and go, wow, he's so brave. So, no, I just have a dry suit on. The bravery would go out the window if that wasn't a dry suit. Or if I had a leak. I would have been out of the water quicker than you think. Where are we going? Where are we going? Back into here. Look for the mean threshold of this candle here. That little turn point right there, nothing. Got nothing for you there. So we wait, or I wait. If you're in this, good for you. Take your run, at least to this daily fair value gap and the mean threshold. Or just keep running this down until you see the reversal happen. Then take your if you're managing this from the back end, you can use this, say, okay, I'm just going to keep dropping to the fair value gap behind it, and I'm going to make sure that if this is my fail safe, so in other words, if I trade above this, come back to it, then chances are that's my reversal that I'm looking for, right? So then you get out of is also your new entry, or your new entry is also your fail safe for your run down, if that makes any sense to you. So here's your fair value gap. That can run all the way back up into this order block, run all the way into it, as long as the wicks close below this. Unless you're a wick person and you like to see those wicks get below it, then you get short. Or you get out and you go long. I can't tell you how to do your trades, but that's the reversal patterns that I'm looking for. What are we coming into here? Tired. See no body above it yet. We have a continuation. Look for further downside over here. Or this could be that little island reversal, old ancient island reversal thing that Michael talks about, where you get a couple of candles sitting in here, then it forms a fair value gap above, come back into it, then we're looking for a reversal. Then I would take that as a long. and you can go 1, 2, 3 on your way up. So do you see how you're starting to look for your setup forming before it even forms? Before it even forms, you're starting to say, this is ideally what I'd like to see. If it doesn't happen, good. What's my next objective down here? And I look for the next little run back up, and I go, ooh, those would be nice little rejection blocks to scale out when I come back up. Look at this right here. See that 15-minute? We're coming back inside this fair value gap. We just hit it. Now, are we going to react off of this back into Cam 1? So we had this whole model right here, Cam 1, Cam 2, all the way deep inside this from here to here. We did not have a body close below it, the 50%. We wick down, give you a bit of a squeeze, and then we start to take off. And you've got yourself a nice little 15-minute runner there. Now we've come all the way back into it one more time, right here. Now are we going to kick off of this and start running back up again? Now once you use this to get above old highs, I don't get super excited about returning all the way back down after you've already hit objectives that you'd be aiming for if you're getting in on this Cam 1 model. So just keep your eye on it, because if it could just blow right through it. Now we've come back, grabbed it, thank you. Now I did my damage. Don't expect to get the same warm reception as you did the first 2 times. Paul Igman, good morning. Good afternoon for you, sir. Harry, good morning. New day opening. Gabby finds some support. Good for you. Grab 22 handles in the middle. Nice. Nice. It's the first day of spring. It is indeed. It is indeed. One of the kids at Carla's school was saying yesterday was the first day of spring because of the leap year. So we actually Googled that, and according to Google, yesterday was the first day of spring. How's that for a little bit of stats for you, Cheryl? You're already a day late for spring. And we're just getting dumped with snow right now. Yesterday was such a nice day. It was like plus 7 degrees or something. And today we're getting dumped with snow. It's going to be almost a foot of snow. This is what happens in Canada. Just when you think you're out of the winter, March, April, sometimes May, will dump a huge pile of snow on you. Yes, I said May. It can just dump out of nowhere. You just get this big dump of snow. You're like, where does this come from? It doesn't stick around very long, but it's still inconvenient. Spring. I caught the turtle soup targeting yesterday's. Mohammed, you caught the turtle soup up top? You caught that up top there, Mohammed? Good for you, man. Excellent. Well done. Well done. That Mohammed's got some cojones, man. Good for you. Oh, huevos. As my friend Victor would say, you have huevos, my friend. You have huevos. Tapo louder. What is Cam 1, Cam 2? Trader's Luck. The Cam models you'll find on our channel here under the, let me show you right here. You go to our channel right here. 3 ways to attack a consolidation. Cam 1, Cam 2, Cam 3. These are Michael's models, not mine. He's never called them a model. He didn't give it a name, so I just gave it a name. But they're all Michael's setups. This isn't Darren's trading according to Darren. The only thing that's mine is that you're all welcome to it, is the fail-safe. But that's where you'll find it. And if you want to go to our ThetaWave or our other links, just click other links here. You can come into Telegram for the Breakfast Club. That's where we go after hours for a little chat, a little brewski, and a little talk. If there's anything you're interested in discussing in there about the markets or Michael's stuff, you can find us in there. That's where I usually am after hours, and that's where I sneak in when my wife goes for a pee, I quickly run in here, answer some messages, or if she's on the phone, I'll run in here, hop on the computer, or she's got something to do, then I quickly run in here and I'll get on Telegram, probably do a couple of trades. That's when Dave and I just kind of got together the other day and just killed some awesome trades in Bitcoin. So, yeah. Oh yeah, I said I would do this. I haven't done this stuff for a while. I wanted to do this for you guys. While we're waiting for something to happen here. Where is the World Cup? World Cup. There she be. These are the World Cup standings as they sit right now, folks. David Long, 34%, all the way up to Mr. Khan at 286. Matt Cowart at 59. Ryan Michel Lavelle. Our friend Darren Hill, nowhere to be found, but our little Canadian buddy. Asher David, he's still hanging in there at the bottom at 5%, or top 5 people. Good for you. Look at these guys. Italy is just cleaning house right now. They're all over the place. Well done. Good work, people. That's some stress, let me tell you. Good morning, Darren. Yes, sir, Mohammed. Here you go, buddy. What are the videos? What are the videos, Julian? All those videos are for the cam models. Cam 1, 2, 3s. They'll give you the basic setups for cam models, and then come in here and I'll show you how to finesse them, and then show you how to set up your a failsafe if you're interested. If you have your own models, then don't worry about them. You'll just hear me mention cam models a lot, just because they're available. People who are perfecting that cam model as their bread and butter setup, they get them all the time. Every time you see a consolidation, you watch them little cam people, they're all excited. They're just foaming at the mouth, can't wait for this thing to bust out of a consolidation so it can get back into it. Look here. Let's draw it out. Oops. That came right back into New York Open. Midnight candle. Look at that. Just tapped it perfectly. But we wait for a setup. Somebody might be saying, oh, I'm going to take this long. You're gambling. Unless you're absolutely sure that that order block's going to hold, and that's your setup, and that order block is holding. You've run above that high, so that makes that a breaker. So you're like, yeah, okay, I'm going to go long. Go right ahead until we get a plan. You have 3 different entries we can take. If this turns around and just books it right back down, and this next price leg down, you're going to go, oops, I should have waited for my setup. So be patient. There's plenty of juice in that orange if it works. Stop loss goes down here. Now, some of you might be saying, well, why don't I just go in here now and use your fail-safe if I'm wrong? Yeah, that could be an entry for you. Entirely up to you. You put your stop loss down here. If the entry was right there off of that and we have a body break through it and come back to it, get out. Look at that, right back and tap it. Mean threshold. Thanks, I'll go through videos. You're welcome. What Bitcoin do you trade on TradingView? Like, there's a lot of Bitcoin related. Oh, yeah. Good. That's a good question. I use this one here, just regular old Bitcoin US dollar on the index. And I look for this kind of deliciousness. I've had this buy order in here for a bit. It hasn't done anything yet. I'm on the hourly. I should be on the 1 minute. Let me get out of here. I was looking at this reprice rebalance and trying to think if I can get in on that, get short or get long on that and start running for this order block above and rejection block. That would be ideally where I was looking for. But that's what I'm looking for. Bitcoin USD on the index. Is that the same one you used, David? Double check with David. Is that the one you were using as well when we were working the other day? Muhammad, my father does the same, but he sneaks out of bed to watch football. Sneaky, that's great. What's your dad's favorite team? Vida Italy. Cheryl, Michael is taking his time. Still have 8 months. Yeah, everybody, you hear this moron on X. I won't even mention his name because he doesn't deserve repeating. But there's this idiot on X that just keeps calling Michael out all the time. I'm not the least bit concerned. Michael, when he's ready to roll, he'll make it happen. And if he doesn't, I don't care. We're proving it every day. Every day in here, if you can't see that his principles work and you're waiting for his spreadsheet to show you that his methods are successful, you're going to be waiting. You're waiting all year for something you could have found confirmation in right here in the 1 minute charts. See how now we've traded below that? Body trades below. You better hope you got yourself out. That's why you wait for confirmation, my friends. Wait for confirmation. It's come all the way down into that rejection block again. So, I'm with you, Cheryl. He's just biding his time. When he's ready, he'll make his move. It'll be big. And we won't hear the end of it, let me tell you. He'll be tweeting like crazy. I love it. Morning, Terry. Terry, did you get some good sleep there last night? We kept you here for 10 hours yesterday. That's dedication, my man. 77, and he's still dedicated. He's still in the charts 10 hours. You should be taking your wife out for dinner. Go for a little walk along the beach in Brighton there. Taking her up the pub. Head up the pub, mate. Have a pint. Have a chat. When she runs to the bathroom, pull out your phone. Like all us men are doing. Italians are on fire, yeah, and ThetaWaveTrader, they're kicking butt right now in the Forex, in futures. They're doing really, really well. If you could explain CAM model in simple words, that would, what would they be? CAM models are these consolidations. Anytime you see a consolidation and you get a break about, when you get an impulse leg above a consolidation, and it finally breaks out. So here's your little consolidated range right here. We have an impulse leg breakout. CAM 1 is the first entry to the high, back to the body. That's a CAM 1 model entries for running for the next high above. If there's a CAM model above, here's more advanced stuff right off the bat. If you have CAM model here to CAM model here, you usually like to trade the distance in between. But ideally, you'll go CAM 1 is the top to the open. CAM 2 is 50% of the range. CAM 3 is not available in this trade. CAM 3 is a model where you have a consolidation with an impulse leg or a manipulation leg that takes out the low half of the consolidation, then runs above it, trades back to a CAM 1 or 2, or comes all the way back into a CAM 3 model, which is 50% of that leg, and then runs up higher. You'll see that CAM 3 model usually occur at 10 o'clock, the manipulation leg. Usually, because if you see a consolidation just below a low, and it usually likes to crouch there, then the manipulation leg goes above, drops down, trades all the way back up into 50% of that, then slams it down. Your stop loss goes above the high. If you trade above 50% of the CAM 3 leg, close it out. You're probably going to take the high again. That's it. Quick in a nutshell. Oops, this 10 o'clock, we're just sitting here waiting for our little, this would be an awesome pop-up, come back in, then find it. This would be great to create a fair value gap in here, and that would be our silver bullet entry for a long, all the way back up into here. By the way, happy Nowruz, everyone. Nowruz? What's that? What's that? What's that, Muhammad? What's Nowruz? I'm not pronouncing it right. I apologize. Whatever that is. Thank you very much. I'm happy to have that too. I like a good celebration. There's also a micro Bitcoin futures MBT1. Manchester United. Since the 90s. Man U. All right. Michael's having fun like a cat with a mouse. Yes. ICT mentioned something about his mother-in-law getting cancer and being unable to help her. Yeah, that's such sad. They've got, I guess she's terminal now and not eating. It's not good. I really feel for him, man. That's tough. I hate for that day to happen with my family. I will be devastated. I love my family very much. And Carla's only got her dad left, and he's here with us today, so he's drove all the way out from Manitoba. We're heading out to Vancouver soon, so we're happy to have him with us today. He might actually pop in and say hello. Holy, we're up to 97 people. 97 people. Raise the roof. Feel the pressure. 97. Welcome, everybody. Power of free trading manipulation before distribution. Yes. Had to drop for a while back on. Do you watch dollar while seeing NQ? No. No, I don't. Honestly, I don't. That doesn't mean that all that other stuff doesn't work. It's just I've found my little niche of working a 1 minute chart and looking for specific setups in a 1 minute chart. It takes away a lot more of the noise for me, and all that other stuff doesn't make this any less accurate, if that makes any sense. Like monitoring NASDAQ for an SMT divergence, I'll see it here. I'll see the change happening on a 1 minute chart when everybody's looking at their SMT divergence. They're still looking for the setup on the 1 minute chart or whatever chart they're on. They're looking for their setup. I'll see it here. I'll see any move the market makes. I'll see it on the 1 minute chart first, and I'll tell you if it's going bullish or bearish. And that's not arrogance. That's not by any stretch. It's just telling you that you can tell when this turns and we're on a bullish or a bearish trend just by what it's going on in the 1 minute chart. Staying on every candle. Don't get bucked off. And all that other stuff are great for direction. They're great for your bias. Once you've determined your bias. And then finding your entries and committing to your entries and getting past this. That's the next challenge. So no, I don't watch the Dixie. If I'm watching, if I'm in Euro and GBP, you definitely watch the Dixie, get an idea where she's pushing for. So there's the rejection block hit nicely. Here's your 1 hour. It would have to trade below this, come back inside that 1, 2, 3 for the continuation on the downside. So if Wednesday ends up being 1, 2, 3 more hours, Thursday reversal, it pops back up into that range and then drives back down into this lower stuff here, then that could be the reversal right here. We've taken this high out. Watch this whole 1 hour chart. Now you go into your 15-minute chart and you'd say if it breaks this point right here, which is obviously the same point, if that breaks out on the way down, we got consolidation. Our CAM model people are just going, ooh, consolidation. I love it. If this runs down below this and then runs back up for a CAM model 1, CAM model 2, and 50% of whatever this leg is that it creates, that would be a CAM model 3 for continuation to the upside to reach for here. Wait and see if it works out. See if I'm wrong. Consolidation, displacement down into fair value gap. Now if you see it run back up and through this, you've got CAM model 1, 2, 3 entries. You decide which one you want to go in. You decide what rules you want to use for each one of them. I'm just giving you the models. Usually if you go for a CAM 1, those are the people who just think, I think this thing's got some energy. I see a higher time frame objective that I want to aim for. As soon as it comes back into this thing, I'm off. I'm going to wait. I'll put my stop loss below the CAM 3 model and I'll wait. And I'll allow it to come all the way back into 50%. And if I'm wrong, that's my fail safe, my 50% of my price leg that comes down. If I close below that, as soon as I trade back into it, I'm out. I won't even let it hit my stop loss, but I will take losses on 1 and 2. And if you're CAM 2 model without a price leg 3, you see 50% of the CAM 2 is, if we trade below 50% on a body close, come back into it, get out, wait, because it's probably going to take your lows. And if it doesn't take your lows and takes off, either change your rule or say, that's okay, I'll wait for the next setup, because they happen all the freaking time. Getting upset about that is a waste of time. Back into here. We're still waiting for a silver bullet. See that? We're chop sideways. Waiting. What has ES got for us? A lot of chop. A lot of chop. Here's a swing point. There's your swing below your low. And here's, watch this, because see how it takes it out? I know some of you are already looking here and saying, yeah, but it gets taken out. Watch. Watch. I'm just drawing it to here. So we're pretending this is our entry. So we closed above it. You went, ooh, good. I'm going to get long on this. And it goes, boop, puts you in here, and then goes, boop, puts you in one more time. You like all of my sound effects, hey? Sorry, ladies. Us guys do this all the time. Boop. We do our little sound effects. So you got a perfect entry, all 3 of them if you like. You pull your fib tool now, and you start running your fib tool as an exit point. 50%, you're out. A big chunk, move to break even. If it trades back against you now, you got a chunk out, and it traded back against you and took you out at your break even. Even in that situation, it works. It pays itself. Just saying. That's the patience of saying, that's my rule. When I trade, I pull my fib tool as an example. And again, you guys don't have to use that. That's just a method. You could use it if you like. I think that he delayed. I think that delayed HM Christopher Wright. She's passed. Oh, she passed away? Oh, no wonder he's kind of sad. Had to drop for a while back on. While do you watch a dollar? It is Iranian's starting of the year, first day of spring. Our new year starts and we call it Nuruz. Did I say that right? Nuruz? Nuruz. Nuruz. Happy Nuruz, my friend. Happy Nuruz, everyone. Happy FOMC day. Look, it's all coming. Nowruz and spring and FOMC. Oh, what a great, delicious day it is. Hit the like button, peeps. 100 people. Did we hit 100 people? Oh, 100 people equals 100 likes. Did we hit 100 people today? Man, that would be the first day I've hit 100 people in the show at one time. All in my living room here. This is awesome. We're all crammed into my little office. Anyone in our country use Ninja 8? Ninja 8. What's that? Terry, is that like a broker or is it a program? Is it a platform? Like what's Ninja 8? Is there a BPR on NQ on the hour or AM, or am I wrong? BPR. Remind me what BPR is on the AM. BPR on NQ on the hour, or am I wrong? 1 hour. We've cleaned out this high here. Oh, yes. There's a reversal right here. You see that right there? Body breaks below it. You trade back into it right here. You could get short on that. Oh, that's ES. That's E-mini S&P. E-mini S&P's got a, hey, honey. E-mini S&P's got a short on the 1 hour right there. You see that? You see that right there, and your stop loss goes above that. Now, if we close above this on an hourly, you come back into it. If you got the patience to wait, see if it comes back into you. And whatever that wick is, if the body closes above, it opens, starts to trade back down, stay in it. The moment it comes back in through your open again, close out. But that would be a short right there. I can actually take that one. Let's work it on the hourly even. See what happens. It's one of those ones I'm going to have to come back to. You don't have to take this. I'm experimenting now because I wouldn't mind seeing how that one works out. I've never done an hourly one. I'm usually in the 1 minute charts, so we'll see how that 1 hour, because you have to have the patience now. You got to say, what if that comes all the way up to here? And you say, yeah, I'm about to lose $200. But that would be the swing, setup, breakdown, body, comes back inside. This could be just waking up for the hour. So let's just wait and see what happens on that one. Let's get back to NQ. Sorry, NQ on the hourly. Let me answer your question there. Well, let's just do it here. Yes. Same thing right here. See that? You could put on the hourly, you could be putting a short right there. I don't want to go 6 handles though. I'm doing all three of them. Just for shits and giggles so you guys can see. And I don't want it to go above there. Ideally you want to go above the top. Actually no, I'm going to show you my rules. Stick with the rules. These are going to be it. There's a lot of trades on the hourly getting up back up there. All right, so we got some hourly long trades and see what happens. Let's get back to the 1 minute. See how you got this conflict of interest here? Yes, that's a conflict, isn't it? So you see how this looks like, hey, look there, and this could be the reversal. You're looking for this to go all the way through your, like your stop loss is sitting way up there. If we get a break through this, come back and find some support at it, it's actually a long. So you only want to see a wick up into here, grab this, and come back down. I don't want to see bodies get above that. So I'm going to ditch these two, just for the sake of this one. Because if I close above that, come back to it, I'll close this one out, which is the bottom of the hourly. Interesting. Yeah. That was interesting. That kind of, my skin's so dry here. Oh, it's damn winter. Winter's brutal on your skin up here. Yeah, okay, I'm just thinking that on an hourly basis, that is the bottom of the swing high to go lower. So this cam model, if we just see this pop up a wick above, clean these wicks out, all the way back even into filling that fair value gap right there. Just enough to clean the wicks out, roll over, come back down, cam 1, cam 2, continuation. If we start digging down into here. And I still haven't hit this one down here yet, so that would be nice to be able to hit that. So once I hit this, and look at that, it's denied. You get a swing, body gets above it, come into it right here. It's a little swing below that low. Body gets above, come back inside, aim for your rejection block. Old highs, you would have got both of those. In a small consolidation, you just nailed them. Or you went all the way back to order block. So you got in here, get out of the order block, rejection, high. Those are your 3 different levels you'd be reaching for. Inside a consolidation, and you would have got them right there off that guy, which is that swing point. Perfect, body, entry, 1, 2, 3, if you have 3 entries, exiting right above you, stop losses here. If the body closes below it, get out. If it keeps running up, that's great, keep going. Rejection block, you're doing well. Do I trade Dow? I'll trade anything. I'm sleazy that way. I'll trade anything. It's all the same algorithm. Whatever chart you put, I don't care if it's NQ or gold or palladium. If it's got a good setup in it, that's the good thing about this one setup I showed you right here. That one setup, go through all your time frames. If you don't see it, move to the next asset class. Look for it. Go through all its time frames. Next asset class. Go all the way through it. It's the algorithm, man. It's the same algorithm. Just look for it and say, "Ooh, that one looks really good. I think I'll take that one." And I'll work that one on the 1 minute chart. And I'll start nibbling a piece out. Then you go hunting for it again. No different than a hunter goes through the woods with his camera to get the perfect shot. Because hunters are not always hunters. They're hunters with cameras. So you go through, you try to find the perfect shot, right? You see that perfect setup and take it. Doesn't matter about the asset class. You're trading an algorithm. All that other stuff's fluff. That are all just different opportunities to bring you a basket of fruit. What the basket sits in, I don't care. Just give me the fruit. Am I wrong? If I'm wrong, tell me. Tell me I'm wrong. Terry, look. Wales. Terry, look at the NT support forms. I personally don't use anything like that. I'm sure if they don't have it, you can find someone to write the code for it. Are you paper trading? Are you paper trading? That's all you'll see me do is paper trade. My live stuff's on a different screen that you don't get to see. It's always paper trading here. It's always paper trading. Good morning, you fine looking devil, you. Well, Derek, you sly, handsome fella. Oh, look, I'm tripped in. Now, here's the rule. I want to make sure that kind of watch this now. 2 seconds. Ooh, look at that run up. Come on down. I don't want to see it go back over that high again now. Oops. Yeah, I'm out. So that's your long. I think we had our 4 different entries. Now this could roll over. This could be the cam model 1, 2, and 3 could be the manipulation, roll over and come back down, then take this out. So it broke the rules, so you move to the sidelines, and my stop loss that we're sitting way up there, we can finally get that out of there. It never gets realized. So on the hourly chart, let's look at that hourly again. See how the bodies, all it's done is just the bodies of the wicks. That's well within a range of a swing pattern. So we've got a reversal on 1 and the swing back into this hourly up high. So we watch this. I bet you it's just going to roll over and come back down again. I still think this is going down. This is going to be just a cam 3 model. Breaker, body gets above the breaker, come back into the breaker, continuation on the upside. I want to discount, so I want it to get right back down deep into that breaker, which can come all the way back to the mean threshold of this candle. In other words, tap this old high or a cam 1 model entry. I wouldn't want to take it at a high premium of this little range that is just created here. I want to get it at a discount, so I wouldn't take it long until it was here. If it takes off, who cares? There's plenty of time. And if you're starting to feel that anxiety about I should have been in this, write it down in a journal, because that's not the right thinking. It's not the right thinking. You're talking the wrong talk to your nervous system. If anything, start looking at this going, ooh, delicious. This is getting good now. It's starting to make a move. We don't have that consolidation anymore, so now we're looking for a retracement, and is it going to retrace to a logical level? Look at this range. Are we ranging for 50% of this range here? Look at how that whole bottom half of that has been worked like crazy. The top half, it hasn't been worked at all. Just a couple of little wicks, blast through it. Back into the mean threshold of the... We're open to the mean threshold. Climbing higher, order block, run up. Back to an old high. Continuation. Fair value gap here. What's the range? Oops. 62%. So we're we're in the premium range of this. Inside this range here, we're in the premium portion of it now. Look up here. See, we're talking about premium and discounts when we're trading from one to the other. This is where you want to look. Discount to go long. We didn't get in on it, and that's okay. If we're going to run to a higher PD array, look for all the reversal patterns to start happening in this level now, so you can get short on it. If this ends up going back into this range here, we're stuck in between these two, so we can get bashed around in here, but there's enough liquidity inside here that you can nibble some profits out of here. So look for a premium array, which is that one that gives the indication that we're going lower. We didn't get in on this one either, unless you're a wick person and you prefer wicks versus bodies. Then you would have been in on that running down. And if you're a wick person, hasn't even wicked through it, this is your first entry, you still haven't got in on that one. If you decided to look at this swing point and say, no, I'm going to take that earlier, we talked about that, and if it trades below, you can get back out. You may say, no, I'm holding on to my stop loss still, I don't care, I think it's going to go long. You're nailing it. But what your logic, you make sure you got your logic in there, and that's not a gamble, that you weren't just throwing the dice and hoping you didn't get snake eyes on that. So this is not a CAM 3 model. This is definitely a consolidation. No CAM model entry. You don't get one here. 62%. Retracement back into that range. It's a wait and see. Hiron, good morning. You just put your movie star face on here to break the 1,000 follower goal. Yeah, not quite. If we're waiting for this to get me 1,000 views or 1,000 followers, I could be waiting a long time, my friend. Fernando, Darren, we should see Bitcoin. Fernando. I like the name Fernando. There you go. There's the high. There's the takeout here. We don't have, unless you look at reprice rebalance, you have 1, 2, 3 entries in here. Once you break that high and you just got your first one, second one, and now you're running higher. Not a strong one for me, Fernando. Not a good strong one. If you are aiming for it, go for your PD arrays like this. You got to get in and out pretty quick because you're in a premium of this range already. So I don't like being in a premium to try and sell at a higher premium where you could get this rollover back. You've got this premium array and a discount array inside this bigger range. And this is, you're pretty much buying it at equilibrium if you can get it in here and trying to get back up to that old high. Because don't forget, this is the swing. This is a swing to go low, take out the lows, and this is now a swing to go high. So you got to trade between the two, and they're almost overlapping each other. But if this takes off on you, congratulations, you're on a run. Keep your stop loss. I'd suck that stop loss up nice and tight. I don't want it to come back into here. I wouldn't even want it to revisit this because it's been worked a lot. So I want to see that just start climbing out of here. You want to see this fair value gap turn into an inversion, get on top of it. Then this one turn into an inversion, get on top of that. Take yourself some money there, the rejection block, and then start aiming for higher stuff. Then pull your range from here and start looking at equal highs and so on, if that helps. Okay, so we have a potential swing. Look at the body, see how the body's stopping on it. So wait for 47 seconds. This could be just a tippy tap down off of these old highs and then continue running up for the next price leg higher. What would that look like if we took another price leg higher? I don't know why I've got that song in my head. Diana. Look at that. Just enough to take out the old high. That will be the next price leg. So we'll see if this holds. If we get above this high here, I take my sticks and I go, I pull it out to here and I say that's roughly the range we're aiming for. These price legs are not always exact. Sometimes they can be like, a couple of days ago we had one that was just like bang on the mark. They can be within a small range above or below that. So as we continue to pull down, we look for potential rejection block. That would be rejection block right there. We'd like to try and reverse engineer these legs and see what would be a logical place for that to go. If that just turned around right there, yeah, that would be a logical place. And if that doesn't work, my next logical place would be the equilibrium of that breaker. And I go, okay, now it's really starting to hammer down. So now I go past 50% of that. I give up on that whole idea of a price leg. Cam 1 model. Back into finally giving us our entry. Let it dip all the way into here. I like a Cam 2 model. Let's do this one. That's a Cam 1. All the way down into here. Let's do a Cam 1 there as well. Might as well follow these models. If we talk about them, might as well take them. Okay, we got all three of them. Now, we don't want to see the stop losses goes right down into here. So if this blows through us, right down there. So now I look for 50%, which was this guy right in here. Wait for 35 seconds. If I close above or below 50%, close out your stop loss before your stop loss gets taken. Oh, the 50% is from here to here. Pull your fib tool from here. Oops. And get this out of here. Oh, let's pull the fib tool. Right there. Jesus, it'll all be over before I get a chance to pull my fib tool here. 50% right there. Ooh, we just closed below it. So you gotta now I take my stop loss and I move it right up to here. Now I move it up to here. Now I'm going to move it up to there. I'm going to get myself out as quick as I can. There we go. I'll take it out there. So it turns around and takes off right now. It traded below the 50%, a little tiny bit. Got to stick to my rule. It did. If it takes off, that's great. But there's that fail safe, so it gets me back to break even. If it leaves here now, I think, well, I got to follow my rule. Got to follow my rule. But you see how that worked? I had a $600 stop loss, and then it managed to get me all the way back to as close to break even as I could get there. That's how the fail-safe works. So if this rolls over now and comes back down, I'm going to be like, yes, save my bacon with a fail-safe rule. PM low, exactly. Love the algo explanation. Okay, thanks, Ibom. Christopher, SMT divergence with ES indicating 5-minute bearishness. SMT with ES indicating for whatever that's worth. I find SMT divergence to be kind of enigmatic. I really have not studied and understand SMT. I know I should know it, but I don't study it enough to know it properly. And I'm not going to try and even offer advice on SMT. Derek is the man to talk to, and obviously yourself, Christopher. I can't give you any advice on that, so I'm sorry. I'm excited my short too much consolidation and session before FOMC. I exited my short. Way to go, Mohammed. Yes, he nailed it today. Woohoo! Mohammed, way to go, buddy. Good work. Would never have gotten short there. Long was obvious to me, but hey, I wish you best as always. It hit consequent encroach in the 4-hour wick. Nice reversal and cam 1 on gold. You got some delay. A rocket. It went up. The 4-hour wick is also a 1-hour order block. I'm bearish on Bitcoin, but always hopeful for a Wednesday reversal. Now buy for order block. Would you be at 2:30? Would you be at 2:30 p.m.? I don't know what you mean by would I be at what at 2:30 p.m. See, now I'm glad I got out. See that? My little tiny rule at 50% was broken. Get myself out of break even. Now it's coming back and squeezing me again. So if this takes out these lows here now, I'm going to be like, oh yeah. This is where the white guy washer machine thing happens. Oh yeah, back in the day, this used to be the dance. Ooh, ooh, ooh. Doing the washer machine. The sprinkler. Remember the sprinkler? Oh, back in the day. So we're back to our little consolidation again. We did not get a chance to catch anything off of that for a run into 50% of the, or 62% of that range, unless you caught this and you were sure that your reversal was happening here off of your New York opening session midnight candle. Look at that, hit it perfectly. If you decided to go long off of that, I don't know, you're brave. You're braver than what I am. And you would have seen something. But right now we're stuck in the middle of these two ranges. So let's go hunting for some fun here. So ES, that literally was closed below. You come back up inside right here, 2. So all 3 of those would have been entered, and then it came back down. takes out your low. Again, it's consolidation, it's rejection block. You have to go to your first one, even though it's a small one. You go, ideally we want to see these ones that give us big runs back down to something different, but when you see there's a swing point below it, you must take out some profit and move to break even. Now you'll say, well, what's the use of that trade? Well, that's your decision. And when you start to see it coming down here with these small little candles and go, if that, oh no, like this just created a low here, that's my exit point, my first low. Do I really want to get in on this? Move to the sidelines. Unless it starts to give a big bold candle, comes down, comes back up, then you go, okay, now I've got something meaty I can reach in for. But always pay yourself at rejection blocks. And this, unfortunately, is your first one, which is really tight. You come up, get all the way in that, you get squeezed. If you don't take it out here, you go, okay, let's see if we can see if the fail-safe would have got us out of this trade. Let's just do this one. I just want to kind of review the fail-safe with you, because I know I get new people in here. I like to say I get new people in here every day now. This is great. So watch right here. We have a wick above, a wick above, a wick above. We're already through this order block above you here. So we have a body that trades above it right there. Stop loss is sitting right here. There's confirmation that you're going to take out the high, or at least head into the rejection block. As soon as you see that and that closes right here, you go, oh man, it's got to get back to my entry level for me to get out. It comes like this, it pops down, and the moment it pops back up and starts to go through that opening again, you close out right there. So your stop is this loss here versus all of that loss there. So that your fail-safe did not get you a perfect exit, but it got you a better exit than you would have had you been leaving it up there. Because that is the indication that we're running for that. You may not believe it. Test it enough times, you'll see. Look at this swing right here. Body trades below it, trade back up into it, and look at that slam right below these lows. How delicious is that? That's what we're looking for, you guys. It's a 1 minute, or that's a 1 hour chart. What an amazing, if you caught that sucker right there at 7 o'clock in the morning, you come up 8 o'clock, 9 o'clock, there's your open, 8:30 open, and boom, you just caught a massive run down. You've cleared out the highs, your setup occurs. 91 people in here. That's an awesome setup. It's an awesome setup. You don't believe me? Double check it. Check it. Go through your charts. Look at it on every time frame, every asset class. Go around. It's the basket you're sitting in. The fruit is delicious. No matter what basket you bring me, the setups are same. It's all algorithmic, my friends. All that other stuff you hear out there is fluff, noise. Michael is giving you something that is just priceless. He's giving you some incredible stuff here. Okay, so here's our New York, what the hell is this? Oops. What did I do there? What the heck did I do? What's this? What did I do? Oh, there we go. Here's your low, here's your swing point for ES. And I missed this obviously because I've been chatting away on other ones. There's your swing. There's your setup right there. Watch the low. You take it out right there. Trade back into it. Hello. There's your first one. Boom. You've just caught a big rush down. Don't believe me? Look for them. They're out there. You can hunt. Literally spend your time looking for these swing points in any asset class. Wait for the crisp, clean, juicy one that you like to see, like this kind. Right? And you can say I'm form-fitting it in the end, but I've showed you enough of them. Look for them yourself if you don't believe me. They're there. And if a consolidation model is your thing, then do consolidations. back into the consolidation again. Would you exited would never have gotten short. I hit this. I'm bearish on Bitcoin. You're bearish on Bitcoin, are you? Stand by. Ooh. Where were we just talking about? Over here, right? Your swing. Body's come back inside it. Right here. You're going long. Come back up into your higher array. You're literally stuck between those two. And that's a 1 hour chart. So where are we at in the 1 minute chart? Here's your swing point right here. Body breaks above. You come back into just short of it. You didn't get in on that one. Didn't get in on that one. Unless you look at, hey, there's the range. If I can get back into 50% of this range here, I'll take it. The macro begins. Right there. Just short of 50%, so even that you can't even use. So you wait. You miss it, you wait. No big deal. So here, if you say, oh, this is I broke that high, here's a reverse. Oh no, I didn't get. You jumped the gun. We did not get a body break below this. We ran up higher yet. So now you don't look at this as the reversal anymore because we have a new high above you. So you wait. Now you've got a reprice rebalance right here. You run up above it. You come back inside it right here. Boom. To go long. Reprice rebalance. Go study it. This is treated like a fair value gap. You may not like those, and you may not know how to really call them, when to call them, when the wick create a reprice rebalance. So wait for these kind of ideal setups. Then we have a swing below. Body runs above. You don't get a chance to get in it. Oh well. Wait. This is not the reversal because it didn't take out an old high. So you wait, this one takes out an old high, right there, see that? Then all of a sudden it goes above that one again. All right, wait for your setup. Oh, here's one. There's a little swing point there. We run above it right here, and nope, you don't get a chance to get in it. Oh well, wait for your next one. Wait for your next one. Just keep waiting. Or go to a different asset class and look for your setup again. It's got to be perfect for you. If you gamble on it just because you want to grab as much money as you can, you're gambling. You might as well just go to the casino and throw some quarters at a machine because that's what you're doing. In here, consolidation. Don't know where it's going, so I wait. You wait. Wait. Ooh, look what we got here. Let's take one. Did I just do a sell or a buy? That is a buy. Okay. Stop loss will go down here. If I'm wrong, ideally I should have put it right there because it goes down, comes back. I can get out at neutral or break even. This will be like a $30 stop loss if I'm wrong. You want to take a piece out here? Or at least for me, I will go, if that takes that high out, or goes to the consolidation, I'll come up to the bottom of the fair value gap. You are the one for me. Scooby-Doo, Scooby-Doo. I should not have it revisit this. Then you take a piece out for yourself. Bloop. Take some money out. Right there. I'll move to the sidelines and wait. If it comes back into here, let's play it again. Then put some money in our pocket here. And we can get in this again. So we paid ourselves at the rejection block. In these consolidations, you can just keep getting paid over and over again. So if it comes back to that, now the fact that it ran all the way through to the bottom here, I like this one. And if it comes back again, I'll take that one. There you go. Stop loss, we'll do the same thing. We just get to start our trade all over again. And we actually get to start a little lower than we did before. And if it breaks through it, we use our stop loss again, and we paid ourselves. We got 80 bucks in our pocket right now, and we're just starting our trade over again. Does that make sense to you guys? Wouldn't you rather have $80 more in your pocket? Going, I did not get my run high. It came back to me again. Well, no, there's your first little payment. If we get up here again and we take these little highs right here, we'll take some more money out, pay ourselves again. And now I want to take my stop loss. I want to slam it right up against here, right against the bottom. This hasn't been validated as an order block, so let's go to the low. I'm thinking we might be able to give this a little bit of juice here. Mean threshold of this candle here, range, perfectly acceptable for it to go down there. Come on up. Now I don't want it to get any lower than that, so now I want to come into here. So I'm risking 35 bucks now just to get this here, because we've worked this whole range really nicely now. So we come back up. Let's take some profits right there. I don't care. It's 130 bucks with the other 80 bucks we made. Now you do this. And you'll see there's a reason why I keep doing this staggering, going higher and higher. I wasn't expecting this, by the way. So I'm staggering it back to my original entry point here now. Take some profits, come back. Stop loss will go just below here because we don't want to see that come down here. And if it takes off, I don't care. We just walked out with 200 bucks and we had start off with a $600 stop loss that we managed to protect right away, real quick. This is just showing you can get this repeat off of this point. Just keep paying yourself at the next array. Pay yourself, pay yourself, pay yourself. Because right now, if you just sat there and you waited, this is up over $200 in profit in your pocket now, while this guy's still waiting for his first big killer play. And we're going to be just slightly behind him in the killer play entry. But we keep paying ourselves. And the stop loss is really tight this time. And then we want to do, we're in again. Imbalance right there. Mean threshold. That's what I wanted this time down beforehand. I wanted this to do this here. But we gave it a little bit of room, so now we can, I would like to see that come back up into here and give us another $100. Risking 80, so we're risking the cost of our first stop loss, our first profits. It's going to come down and give me a little poke here and take me out. Rejection block. No, I don't want to see it get any lower than that. If this starts getting up above this candle, I'm going to pull this right in tight. Because we're in a consolidation here now, so I'm expecting it to come back and take me out at some point. There you go. So same kind of trade, you put that one over there, now so you watch. I'm just going to watch this now to see if this closes below here. We got 8 seconds left. Nice. So technically you're still in this trade. Stop loss is here, you're waiting. If this closes below you here, the highs have been run out here, running out these lows here. You're inside this range. You're between this candle's high and that candle, or that candle there and that candle there. See how they're almost overlapping? So it's hard to trade the range in here now. It's got to extend past the midpoint here, past the midpoint here, or past the rejection, or high. So as we're sitting inside this range, we're compressing, right? So you're going from premium array to discount array. Pull your range and you'll see. We're watching minute by minute, watching the algorithm do its thing. So we've just come from here. We validated that candle right below 50%. The validation of this candle is sitting at the discount array. We wick through it. We run back up inside it. You want to see this really push through now. And you see how that original trade that we had on, had we just said, you know what, I'm just going to leave it back here and wait for that to trade back through me. I have mine really super tight. I didn't want to see it come back down in there, but you could allow the mean threshold, which makes sense. Not that I think about it after the fact. You just do the same fail-safe rule over and over and over again. Just stick it here, wait. As soon as it gets you, you're right there. That's the profit we would have just had. So that would have been another $100 had we just played the same rule we did over and over again. But I pulled my stop loss too tight. But I hope you understand the logic there, right? And you'd be up $300 right now, $300 just waiting for this thing to get out of the range. So we're up $200, but made or up $100, and then you wait for a better setup, nibble some profit out. If you would be here at 2:30 at FOMC, oh, will I be here at 2:30? FOMC, yeah, I wouldn't mind sticking around. We've got guests here now. Carla's dad's here, so I don't want to let him sit here all day. That would be about 12:30 my time. So I think he wants to go out and have some fun. So I might not be here for FOMC. And as I get closer to the end of the month, I'm going to take a week off at the end of the month. So I'll see you guys back on the April 9th or 10th or something like that. I'll be back. So you get to try all these things out and tell me how well you did. And then we'll be back into April, because I think April's going to be an awesome run. Either up or down, I don't care. It's going to be an awesome run in April, especially NASDAQ. We're expecting that to go into a deep discount in April and then carry that run all the way up into the high May. It's going to be a good one. Press Control Z. What's Control Z? Control Z? Did I just give you control of my... Ooh! Control Z. Oh, that just gives me back to my fair value gap. Control Z. Oh, it just goes backwards. I get it. Look at that going now, hey? So that original entry that we had we just stuck to the original rules, you would have been 100, 200, 300, you would have got here, and then you would have been out. But if now the guy who kept his on here said, yeah, oh, you're fiddling and farting, I'm in it now and you're not. And that second one that we got into, or the third one we got into, was the second one? First one here, second one there. Third one we're getting into is we should have just used the same rule and we'd still be in this thing full on, killing it. Silver bullet time is over, right? Silver bullet time is coming up right now. We're going into another silver bullet moment. It's 11 o'clock. Here's the retracement we're talking about, 11 o'clock. Remember I was telling you retracement from 11 till 10? That range that happened between 10 o'clock and 11 o'clock, that's the range. Look for a retracement from 62%, up to 62%. Retracement into that range. So let's look right here. 62%. That's when you're using, once you're in this thing and you get into this trade, that little reversal we just looked at, we just got to play in, you start scaling out a portion here, a portion here, a portion at 62%. Now, if this just rolls over and comes back down, that'll be a mic drop moment. I could just close the day saying, it worked. It worked. So look for a retracement back into Cam 1 model. We get a body. That body did close above. Pop in. Exit Cam 1. Tiny Cam 1 entry there. And again, we wait for our swing points and then wait for your next setup. And once again, I've missed the boat. I was pissing around too much. Whatever. I get to sit there with some money in my pocket as I watch it go away. My demo dollars. Are you going to be at forwards is Control Y? Oh, okay. Forward is Control Y and Control Z is backwards. Gotcha. Thank you, sir. I love it when you get these people that know how to use computers. No, not a week. It's more like 8 or 9 days. Mind you, I'll be here on the Friday with you guys. And then Saturday, Sunday, yes, be a whole week. I'll be back on. I might give you a review the day I come back, which will be Sunday. I might give you a quick review on Sunday, and then we'll get back at it on Monday the 8th. Monday the 8th. Yeah, it's literally a week, just over a week. To go backwards, it's Control Z, and to go forward, to go further, it's Control Y. This is not high probability day, right? That does not look like high probability day, but you see how we managed to catch something inside a consolidation, and we traded inside a consolidation, catching what we wanted. If you keep following the rule, the fail-safe rule, we'd be in this right to 62%, scale out at those 2 points, and move to the sidelines. Because usually you get that 62% between the run from 11 till, or 10 to, open till 10 o'clock. Look at that range, and then jump back in at 10 o'clock. What a nice little opportunity here. As soon as you see that leg run down, there's consolidation. There's CAM Model 3. So CAM Model 1, 2, CAM Model 3. We break above it right here. Body breaks above. We come back into it here. That would be but we have the reversal that happens in here. This is a great opportunity to get long. Well, great. It's an opportunity. I wouldn't say it's great because of all the consolidation you're in, but there's still a swing below the low that creates our little model that we start reaching for first. Take profit, move to break even, and if we keep going higher, 50%, 62% of that length using the fib tool. Again, that's just my method. You guys choose whatever you want to get out of your scale out of your ranges. But that's what I should have done. It's easy to say shoulda, coulda, woulda. I was dicking around too much with my stop loss and not instead of following the rule. I kept saying back here, that could run back into the mean threshold of this candle, find support and keep going higher with a wick. So you're putting yourself in jeopardy there, and sure enough, it took you out. So no, it's not high probability right now. Not high probability. Christopher, how do you see bias? I haven't heard you speak much of bias at all. Bias, you'll hear me in the morning. I'll look at this over here on the daily, and I will treat the daily candles like I treat the 1 minute candles. And if I don't see anything decent in here, I treat the next one down, which is a 4 hour, and that's my bias. I look for the 4 hour that looks for the setup, that looks for the range, that looks for where I'm at, and I'll say, well, I'll draw my bias off of that. When I'm trading a 1 minute chart, I just want to grab 30, 40, 50 handles at a time, right? If I see something on the daily and I see a setup in here and I go, I catch that there, I'm trying to work on, to be honest with you, try to be transparent here. I'm trying to work on saying, okay, that's my objective. My bias is low, is down today. I'm heavy. So I'm expecting it to reach to this spot right here. That's my bias. If I see a swing point up top, I got to put that on there and walk away from the charts. But I love hanging out with you guys. So I tend to talk myself out of my charts many times on the way down. So my bias are usually determined early in the morning when I look for the Monday or the daily candle. And I act no different on a daily candle than I do on here. So if my bias here is to go here off of this candle turn here, and I go, ooh, I'm going to catch that long. My bias is long. And that was a daily chart. I'd be sitting in here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days before it finally took off out of there. So if you're in this one, right when it broke above, you go, great. When that comes back into here, today I'm expecting it to run back into this high in this area where I can get long. You get long and you start to go high, and I go, I'm going to aim back for this one if that was a daily chart. So I wouldn't treat my bias. My bias is made on my daily based on exactly what I do on a 1 minute chart, if that helps. Which it should be. It should be nothing different. Nothing different. We're not trading any time frame any asset class with any different logic. It's the same logic Michael's taught us. We're just using it in a micro level on a 1 minute chart, and we're saying we're literally trading candle to candle, and we're keeping an eye on each candle as it forms, no different than I would over here. And if this setup occurs over here and that hits my key spot and I want to get in on it, put my stop loss above here, and the moment it breaks below a low, I'm going to slam that right up tight and let it run for the rest of the day. Here's where you get your trading objectives and your bias, and here's where you find your entries. And I don't worry about, as you see, I don't worry about all these other charts. I only worry about them when I can't find a bias here. I'll go down to the next one, which would be a 4 hour, then a 1 hour, then a 15 minute, so on and so forth. Does that make sense? Hopefully it made sense for you. What's the logic behind CAM model? I've never seen that model before. If you've studied any of Michael's stuff, you've seen them all. They're all his. I just call them the CAM model, which is the consolidation attack model. It's not Michael-ism at all. It's just a Darrenism. I've just give it in my own word. CAM, consolidation attack, the consolidation model. And Michael, you'll hear Michael say many times, when you see a consolidation, you wait. You wait for manipulation and then distribution, right? So when you see this break above a consolidation, he says it will return to the consolidation to give you an entry to go long. It will give you, it can run down into 50% of the consolidation to go long. And he never mentioned anything about this model, the 3 leg. But I just added it in as a CAM 3 because it works really well too for taking out an old high. Take 50% of that, which ends up being the same kind of model here, but in a CAM situation. So I just call them CAMs, but Michael in his material has said that many times. A high or the midpoint of the consolidation is your line in the sand. If you trade below 50% of that on a close, use your fail-safe. Get out. And the fail-safe is just something that I've created. It's not a Michaelism at all. It's just some way of, I like to try to manage my accounts. And clearly I didn't follow my own damn rule right here. Otherwise we'd still be in some profits here. So I hope that answers your question, Julian. Wow. There's a blast from the past. Commitment of traders. Nope. Never look at commitment of traders. It's so much stuff. He gives you so much stuff to learn. For the lack of a better word, no, I'm not going to say that word. I've made it simpler for myself to understand it, and I like to be in the middle. This is like reading an ECG strip for me. I like to be in the middle. I like to watch every little freaking nuance that goes on in an ECG so I can see what's going on with your heart. I like to look at that muscle and I like to go, what part of this guy's heart is he having a heart attack in? Is it an anterior? Is it posterior? Is it the circumflex artery? You know, is it the right side? Is it the left side? Which side am I expecting this guy to have with his signs and symptoms? What part of his heart's damaged, and how can I treat this? Do I give it fluids? Do I give it pressors? Like what would I give it to help his heart out? And I look for it in the ECG. So here, I love playing in a 1 minute chart now. I used to just spend forever in hour-long charts, and I'd get frustrated because it wasn't moving quick enough, and my mind is so all over the place most of the time anyway, that I like to spend my time here. So I like to watch every candle and then watch every array that forms in every candle, and I relate it to the next one, and I relate it inside that range. And I have no idea of all that other stuff. No idea. And if this accuracy is not enough for you and you need commitment of traders and it helps you trade better, take it, learn it, study it. It's awesome stuff. I've just made this is you see me, if you were ever get into the charts, come down to the 1 minute. That's where you'll find me. I muck around in here. But I don't look at commitment of traders. I don't look at SMT divergences. Not that they're not good. If you know how to read them, and I've seen there's people in here that can read them super, super well. And all the power to you, man. All the power to you. I just like to play. I like to hang out in here. So I may not be the live streamer that you like, because you might like that other more robust information. You'll see me do a lot of rinse and repeat stuff here. Like, I'm just looking for this, I'm just going for this, real quick, in and out, super sniper mode. That's more my trading style, and I'm trying to push it longer because I can see the potential for it to go longer and stay in a trade longer, and that's what I'm honing that skill. And some people prefer that, they like to see it. But hopefully the analysis that you're seeing here will help you on those higher time frames, and how you can draw in the commitment of traders and all that other information that you're obviously much more versed in than I am. If that helps you create a more robust and full trading plan, then I'm happy to help. Oh, I just fired that right out my nose. I just fired that water right out my nose. So hopefully that answers your question. So hello, Somer, how are you? So remember, we're looking for reversal patterns. So that's 62%. Then we look for a reversal pattern, and we did not trade below it. See that? We keep staying in it. We keep going up. Now you might say, ooh, what about that one right there, Darren? That looks like it could be a reversal. We've run above a high. There's a reversal. The body's traded below it. We've come back up inside it. Now you got to ask yourself, all right, have you traded above it? And are you going to continue higher? So small little consolidation. You trade below it. You came back all the way through it, and then you closed above it. And you go, oops, I'm on the wrong side of it. It's probably going to keep going higher. Stop loss was here. Get out. If it opens up here and you go, if it comes back to that high again, I'm out. Or it's just starting to squeeze your stop loss. You got to be prepared. If your trade is wrong, you should be able to get out before your stop loss. This stop loss up here is just meant to catch you when it rips through. It just suddenly just goes and takes off on you. Then it gets your stop loss, and that's the stop loss. You're prepared to take 1% of your loss. You should, majority of the time, not take a full loss on your stop loss if you have a fail-safe model. And you're welcome to use mine. It won't change my trading style at all. But you can see when I get too cocky with it, I could be in this still, right? I should have just left it alone, still following the same rule. I would have had 2 trades. Third trade, I would have been up there with $300 more in my pocket and all that money right there. Or $200 more in my pocket and might still be up there. Right? Stoic Jack, where's the carrot? I keep forgetting the carrot. Stoic Jack, he reminds me of the carrot. So imbalance, see the imbalance right here? Imbalance, order block, breaker. Is that a breaker? Yes, it is a breaker. Big breaker right there. So look for that up there as well. See how we traded below, come back into the order block. No swing point for me to get in on a swing to run up. That was the only swing we're trading off of there. Carrot. Theta friends, let's give Darren a YouTube thumbs up for his time and knowledge. I know he appreciates it. I certainly do. Thank you very much, Lambo. You're a good man, Lambo. SMT should be studied during London and New York. Lunch manipulation as well as opening market manipulation for confirmation only. You know what I'd like to do is, if any of you guys are willing to, I would love for you to share with me your SMT, understanding SMT clear, like how you see SMT according to Michael's techniques. And I'll do an interview with you, like say on a Sunday. I'll pull you in on a Skype chat. We'll have a little chat while we're doing the show, and you can talk to me while you're doing it. We can do a little Sunday review, and we can talk about it on Sunday so you guys can see this SMT divergence rule or smart money tool. There, look at that, you hit right on there. Now look for your fair value gap to fill right there. Now this is where I sit there and go, oh, you shouldn't have been dicking around with your rules, man. Look at how much fun you'd be having right now. You'd be killing it. Take a look at a break of structure after the liquidity sweep. The breaking structure above liquidity sweep, breaking structure to the upside. We don't get a chance to get back in on that, but you break. You do the liquidity run, so you sweep liquidity below the markets, all of that down in here. Then you start breaking to the upside. You break the high, come back to it, tap it right there. There's your breaking structure to the upside with a up close candle, or back into a cam model if you're looking at a cam model, and then continuation. So remember when I was talking about trading from this one to this one? See it right there? There to there. That's your final out. And wait, or if you got 10% left on there, if you're scaling out your portions, you go from one model to the next model. Inside that range. Looks great. Works out just great. Now I'd like to see it ideally get above this, create a swing point, but this here looks good. We get these highs taken, so another swing. Body closes below, come back inside, stop loss goes here, do your rinse and repeat back in the same direction. Now you're going from here back to this one. There you go. Take your entry here. We'll do one here. Stop loss will go above us here. Now if this is wrong, you're going to find out real quick. We get a body that closes above this. If I hit rejection block and I start going into the rejection block, I'll close that out. Like if we start digging into this candle here, I'll close it out before it hits the high as well. But right now we're right in the mean threshold of that candle. This time I'm going to wait. We're going to play the rule the right way. So I can either take a full loss here if this runs through me, or I can catch this return here. But I'll follow the same rule, fail-safe rule. See, I don't like this bopping around up there. Not good. I so want to get out of this right now. But I'm going to try and stick to my rule. I'll either take a full hit. 3, 2, 1. We've traded above it now. Trade below. If it pops in, I'm out. Oops. Shit. I took the wrong one. Took my stop loss out. So yeah, traded above. As soon as it comes back into that again, if it keeps coming back up, I get out. Now if it comes back all the way into it, because ideally right now we've traded above, it could come back into there and tap that high right there. That would be your exit, because we're going to go higher. If it comes all the way back into there, I could have got out full even. But that's the finessing I've got to try and sort out with my stop loss and how to manage my fail-safe. You guys will develop your own rules around that little piece right there. How you manage the close above. Boom, see, would have been hit. So a lot smaller stop loss than taking that full hit you would have hit right here. Trying to catch that. Fail safe, it works again. And the difference between my loss and a full loss, or you would have waited all the way back and got a little piece out. Now watch this. This where it turns around. It says, now I'll take it. So here's a way to manage this. If it comes back, if it closes again below this level, see how it's come back to order block? Right. I didn't quite hit that breaker yet. And it's the swing of the hour. It's the bottom of the hour. Now if you run back, we've closed below it. If we come back into this area right here, you go short. If it revisits it again, now that high's been run out. And if all these lows get taken out, then I bail. $9.30. Oof. Just thinking. I'm going to wait for this. Keep your eye on that. I'm just bailing out of an idea here because I've got another idea coming up. So keep your eye right here. I'll draw that out. If it comes back into here, stop loss goes here. Again, forget this. Goes here. Repeat this same thing again, aiming for these lows and back into this camel. I'm going to clear my throat. I'm going to turn off my sound. Hang on a second. No, didn't come back there. Sometimes what will happen is it'll go through, it's like this, come back, take you out, come back one more time, and then continue down. We'll see what happens. I'd like to see these hold. Let's come back in here one more time. Wait for a better setup. Wait for something cleaner. You can scour through all your charts. You can scour through all these different levels now and time frames to look for your ideal setup. You've seen it. You've seen me show it to you multiple times. How to get out of it, how to bail out of it. Just remember, when you're on a higher time frame, your bailout fail-safe is a lot longer, and you have to have a lot more patience to hold that. And if that was a daily chart right there, and you realize you closed above it, and your stop loss is sitting way up here, and it ran all the way up to you here, then turn around and start coming back down again, and you went, oh, good, as soon as it comes back into my daily chart, I'm out. But you have to keep in mind that your mindset has to be pretty solid in that, nope, my rule is broken, I'm waiting now. Then when it run back through on a Thursday or a Tuesday, you go, whew, I'm glad I did get out of it now. Then you see this, you go, damn, I should have stayed in it. That's not the mindset you want to be talking to yourself in. This is the one I said, you got a right to say, damn, you should have stayed in it because you're dicking around with your rules. That one broke your rules, so you get out, even though it came, eventually it would have taken you out anyway, so it's a bonus. And then it went in your direction. So ideally you want to see that come back up. This candle here, I wanted to see come back in, hit it, and then we would have been collecting all this. But this candle here did not do that. That's the one I was counting on. So now you wait till 11:50. You wait for the macro to begin, my friends, the web macro, because that's when we see it where you should expect a swing to take out a high or a low around the 11:50 mark where the macro begins. Look for a new setup right around that time. Get in on that and do the same rinse and repeat. Follow your rules. Follow your rules. Take a long, safe, how's it spelled? A fail-safe. It's called fail-safe. So in other words, it's something that kind of, it's like having in firefighting, we have a harness on. So you're trying to climb, and if it fails, you drop down and it holds onto you and protects you. And if it snaps or gets cut through, you've got your ground, which is your fail-safe. That always tends to stop you. That's the stop loss. That's where it all ends right there. So you want your fail-safe to hold you. Fail-safe's a great way to protect the stop loss you want to put in. And then the fail-safe is dynamic. And I should do a video on that one day, but it's a very dynamic thing in that your fail-safe moves with you when you're going in the trend that you're going in. Your fail-safe follows behind you so that if it comes back through you, it breaks through a logical level. You say, now the market is shifting in the opposite direction. If this area here breaks, the market is shifting back the other way. I'm out. That's where your fail-safe's got to save you in that. In my mind, that's how it's got to save you. So I try to develop a way that as I get into a trade, how do I know what I want to look for? What range am I in? What PD array is above me? What level of space or buffer can I have in here? And my fail-safe is that point. So that if I drop below that, you go, wait a second, you drop below that fair value gap, that inversion, that body drop below it, I'm out. So if I'm trailing up, I'm out here because I'm expecting it to come down even lower. And that's just going to eat into my profits. So your fail-safe's a dynamic piece. It not only is your fail-safe for stop loss for losing money, it's also a stop loss for losing profits. As you're going up, your fail-safe saves profits in the end as well. So it's a very dynamic piece. And again, you're welcome to use it. Mate, can you explain a unicorn setup? Unicorn setup is usually your, when you get a break of a high, you get a fair value gap. You get a break, a smart money reversal. You get accumulation. It runs back up into a breaker and then a distribution. And then the accumulation to a second level of distribution is usually the second level of distribution you catch, which is the big slam down. So that's the unicorn setup. The first one, wait for the second one. The second one is usually the big grand slammer. It's almost, it would almost be like this if this was just accumulation here up into breaker or order block. If this was down here up into this order block, come back down, create this another little area of consolidation, accumulation, back up into another breaker, and then second level distribution is when you just can see this go, and it just has these huge crashes. Go to the ICT index.io for a cleaner description of unicorn trade. Don't take my word for it. Go and listen to it straight out of the horse's mouth, the guy who codified it. ICTindex.io and type in what's a unicorn setup. And it will take you to the video. It will take you to the moment he actually says it. It will put it in text so you can read it. And it will put you in a graphics, how he's talking about it, what video, and all the different videos that he talks about unicorn setups. And it moves you right to that specific spot. It's an AI that brings you right to the video that talks about his unicorn setups. It's amazing. So have that as a side tab that's sitting there all the time, ready to roll anytime you have a question that you're not sure about. It's better to check with that than to check with me, because you're getting it straight from the horse's mouth. You're getting it right from the unicorn, not from the horse. The horse down here. Shifts in market structure should top or bottom with a breaker pattern. Yeah, shifts in market structure can be from the top. You can break market structure to the upside, and you can break it to the downside. As soon as you get a swing below a low, you have like these swing patterns, all these little lows you see here. The moment you break market structure, we have a break in structure to the downside because we swung below this low. Then you continue to break more market structure to the downside and supporting that. We'll break the upside structure the moment you start running above an old high. Here's your reversal pattern. We've swung below these lows. We've come back to CAM Model 1 entry right here. And you have a setup for a long. So this could be the next price leg up, higher, into here. Watch right here. Watch that one, that candle for the next 17 seconds. And I'll take it with you. This is just demo balling it anyway, so we'll see where this one ends up the next 8 seconds. And there you go. We'll take one here as well. And you just use your stop loss. If you're wrong, if you break below this, your stop loss shouldn't get taken unless it rips through you, then that's what it's for. You wait for, if a body closes below here and you trade back up into it, you get out. You close this out. Hopefully before it takes you out. 15 seconds. Coming back into an order block, mean threshold, little tiny imbalance, just filled it right there. So I want to see this close up above me here now. and it doesn't, so it comes back up and you're out. So now it should roll over and come back down. Body traded below it right there. You come back into it right there. Because I added that guy there, it just dropped. It moved my stop loss up a little higher. Now if it takes off again, that's the thing you have to finesse for yourself, for your stop loss. If it comes down and takes me out, you'll see why I like that, my method. Or you might be one of those people who say, look, man, that's the stop loss. I'm going to risk 1%. I'll risk 1%. I don't care. Okay. And there goes your 1%. Or not. It may come, give you a good squeeze and then leave. But that's not an ideal setup, right? Believe me, this happens enough times that you'll get the ideal setup. It will come down, tag that guy perfectly and leave. And not even dip down below you. It's this dipping down thing you got to start getting nervous about. The best ones are the ones that just come down and tag the top one and leave that open and leave. Then you know you've really got a tiger by the tail. When you start getting all the way into this and it starts popping through, there's a less likelihood that you're going to get a big run. Obviously you can definitely have it, but it's a lower probability the lower we dip into this and start creating wicks below it. Unless you just got a simple little order block sitting right there. You say, okay, I'll allow mean threshold. I'll allow that little imbalance right here. But if this rolls over and takes that now, you'll be like, oh, it's a good thing that fail-safe saved us yet again. Small profits, small losses versus bigger losses. Right there. So you would have been done. So once again, it paid dividends. We're hoping to catch a nice little return. It took us in, didn't take us for a lot, didn't wipe us out. Some people put their stop losses in there and go, oh, I got taken again. I was just running this low. I was just doing turtle soup here. Well, have a fail-safe in place. Develop your own rules around that piece right there. Then you'll develop your own fail-safe strategy. And if it works really well for you, let us know. Share it. Let's meet up on a Sunday. Run a little interview. Let's have a little chat. So here's the thing we've been talking about earlier. %50 of the range. Bang on 50%. See that snap off of there? Not this one, that one. This is the leg that takes out the consolidation. So that's the CAM Model 3. That's CAM Model 2. If it closes below 50% of that and you're a CAM Model 2 trader, then as soon as it pops below, comes back into it, break, get out, just like we did over here. That's how you finesse this consolidation attack model. And if it comes back up into an area that you want to find support in, get out. Order block, for example, take a piece off there, move to break even, and wait. You want to see this leave. If this is going to leave now, you want to see it leave. But because you got a CAM Model 3 entry down here, the next CAM Model 3 entry is this one. Right there. So 50% of the guy is right here. If we lose 50% of this model leg here, now watch, just watch to see what kind of reaction you get off of that level. Wait for the body. For a cam 3, you'd be putting your stop loss here. Wait for the body. You want to see this no body close below that. These stabby wicks can scare the crap out of you, but just watch them. And you can get this kind of return, and then all of a sudden, boom, off it goes. The fact that it keeps revisiting this right now, I'd be like, as soon as it came back into here, I'm out. That's just me. I don't like the way it's coming back in multiple times. Usually it just taps it, goes through, and then takes off from there. At 10:30? Yes, I will, for sure. Now you get out there. Now you break even. Done. See how we close below? Come back. It's heading for the lows. Right there. You got the perfect opportunity to get out right there. So you just move to the sidelines and wait. Cam 3, move to the sides. If you entered on a Cam 1, a Cam 2, and a Cam 3, and you got your Cam 3 exit, you took a loss on 2 and 1. But that happens. Just remember, anytime you have a consolidation model, you want to look for what objective above me am I aiming for to get in on my cam model. And if that objective has been hit and you come all the way back to your cam model, it loses its luster. It's like I explained earlier this morning. They lose their luster when you start clearing out the objectives that you're already hit and you haven't been had an opportunity to get in on them. Then when they come back to them finally later, they're less likely to unfold. I still could, but less likely. And I know that sounds like I'm form-fitting it, but go back through the charts, you'll see. We are dipping down for another cam entry, or shall we continue? I think we had a unicorn sit up in the 5 minute. I guess I'm wrong. 5 minute. Let's go into 5 minute here first. First level consolidation shouldn't take out the high though. Should come back into there. First level, second level. This would be like a slammer down. Usually you're looking at these big long runs up. They come down, take out that first one, then they create this little consolidation in here like this, come back up, and that's when you get this big rocketing trade down. But so far you're hitting a breaker. You came up to the breaker, you keyed off the breaker, you came up to the breaker, and now you're expecting a slammer down off the second breaker. You want to see it blow right through this thing, because this is mitigation here. I'll put my little carrot down here, give it some motivation for you. See, there's a little piece of fair value gap down here still available. Breaker, swing point, mean threshold. You're inside this range between that candle and that candle right now. Let's get back up in here. That's my entries for cam model, my exits for cam model 3. So that would be the consequent encroachment of the consolidation and the consequent encroachment of the leg that takes out the consolidation. Those are my two exits if you trade below them. If you have a cam 3 model, your cam 2 model has to stay on and you have to use your cam 3 model exit as your exit. You only use the midpoint of the cam 2 model when there's no leg. It's just a small consolidation like this without this leg that takes it out. So I definitely would have been out of it there. Well, I was out of it there. You saw me take it out. it didn't take out the lows where you put your stop loss, and now it's coming back in. So we're back into that. What's your fail safe? Are you going to finesse your fail safe and say, look, I'm only just going to, I forget my fail safe, I'm just going to go for my stop loss? Then you're back in profit, and you have no stop loss. You just have, or not have a fail safe, you just have a stop. Your stop's working. Now you march back up, do whatever you need to do. So you can see there's something that's personal for every one of you guys out there. How you manage your fail safe, if you have a fail safe, how you manage your stop loss, to me is just as important as the direction that you want to go. And I love the mobility of the fail safe, the fact that it's dynamic and it can move with you. It's not a rigid place. Like a trailing stop loss always has a rigid place of so many pips behind you or so many handles behind you, but there's no logic to it other than the fact that you're just hoping that it's going to trail a certain number, and every candle is a different size. So that whole trailing stop loss thing just bothers me. Well, this is a trailing stop loss on steroids because it's a failsafe and it's a reason for it. It moves to the next level and it waits and waits, and then it jumps to the next level because that's the next failsafe. It's not this rigid little trailing stop loss. If it makes any sense, if that makes sense to you guys at all. Can you predict all the moves? Too many variables. You can't predict all the moves. Too many variables. Really? You can't predict all the moves. What moves are you trying to predict? What is all the moves? Be more specific. What are the variables that you're putting me, the parameters you're putting me in? That's a very bold statement you have there. Maurice. That's a very, yeah, you're right. If there's too many parameters, you can't predict it. Give me some limited parameters like ranges and PD arrays, then yes, I can predict it with a relative sense of accuracy. Stick around, you'll see. So be careful the statement you're making, because the statement you're making is too broad and it's too sweeping and damaging because, yeah, you're right. But you haven't specified what parameters, you haven't specified what variables in order to make the statement of whether you can or can't predict something. So be more specific. Tesla, Apple, Google. What do our Golden 5 do? Tesla, Apple, Golden. I don't know, but I can tell you where Tesla's gonna go or Apple's gonna go based on a algorithmic chart. When you're trying to use all those in combination, you're confusing them. You're saying Apple has to affect Tesla, Tesla has to affect this, that has to affect the market. Too much confusion, too much noise. Get down into this level and you'll see a level of accuracy that you cannot deny. All that other stuff is noise. It really is. And on Sunday, go back over our Sunday one. I'll show you how we traded PayPal, the swing on PayPal on a minute chart, and stocks, bonds, commodities. We showed you on wheat this morning, the predictability of wheat. Wheat's variable. Wheat's one of those things that's totally, you can't predict the weather, whether or not wheat's gonna grow a mold or a fungus in it, or I just trade the algorithm, man. It's just technical stuff. All that other stuff, companies affecting other companies, all noise. And that's not arrogance. Please don't think it's arrogance. It's not. I don't stay there. That has nothing to do with what I've done here. And if you've watched me for the last 6 months, you'll know that I've never ever said this company is affecting how this market's moving today. Never. You watch me trade this on a minute by minute basis, and you can ask the people that are in here already who've been here for a while whether or not this is accurate, and you'll see our community's growing because it is accurate. At the moment, the movements are random. Market square positions. square positions are hedging before FOMC. That may be true. I have no idea. No idea. All I can tell you is inside this range, we've just hit an order block that should provide a level of support back to a level that's a breaker. We can get some support off of this and run higher. If we break this candle's low in here, we're running for a lower range. Fair value gap, looking for the range. We have a discount array. We have probably an equilibrium array here. I suppose if you pull the fib tool from here to here, I can almost tell you right now, Maurice is like, this guy doesn't have a clue what he's talking about. I can almost hear his words right now. This guy's a nut bar. So order block is valid. We've traded below it, come back up, find some support. If we lose the Ming threshold, look for higher. Look for a bigger dig into here. And then look for the potential for the next price leg up. But for now, if this candle holds, look for a discount array below 50%. That's a premium. Your discount's down here. So watch this. Does this hold price or do we lose price here? I like this. Is good. I like people come in. They get a firm belief about something. This is great. We have a weaker dollar and upper bonds. In theory, at least 2 upwards. Wow. That's a level of understanding, my friend, that you've got, that you have a lot more fundamental. I'm gonna concede to your fundamental knowledge. I have no clue. I'm purely a technical trader, my friend. You'll see I don't do any of that fundamental stuff. This is probably not the place for you. You're probably going to get frustrated. You're probably not going to get the joy out of this that you're hoping or you're looking for. All those parameters, I know a lot of retail people believe in that stuff, and you may find reasons to find proof for it and it works for you. Then, you know, man, I bow to your convictions, and I totally respect your convictions too. So see how we just tapping into the fair value gap here. We get some support off of this. Look for this one to either give way or we're going to revisit the discount array. We have now validated this as an order block, so continuation on the downside. Is it Apple, Google hedging before FOMC? Bitcoin had 2 nice tap reversals. Is it okay if anybody gets in a trade and lets the chat know? Is it okay if someone gets in a trade and then lets? Oh yeah, if you're in a trade and you want to let everybody know you're in a trade, well, I got no problem with that. I have no problem with that at all. Shorting the bottom? No, I'm not shorting the bottom. I mean, it's just inside a range right now. I'm just talking about being inside this range, and I'm looking for a discount, anything up to 50%. If I get that and I get a next reversal on the way up that proves that this is a further upside run, then we'll have another price leg going higher. Looking for these old highs up here. Rejection block. Otherwise, we're just inside this range between this candle and that candle. So until we break the mean threshold of that candle, we're coming back into this range. That fair value gap there needs to support price if you want to go higher. If we break it to the downside, then yes, I'm into more of a discount look in this range. You may have much more of a macro perspective on what's going on right now. I'm just looking at this, whatever range I'm in a 1 minute chart here. I don't have a macro view. I'm in the trees. I'm in the leaves in the trees, right? So watch your 50% order block. So far we're finding support at the mean threshold. Look for your 50% and then look for a discount array. Just dipping into that, and you got a discount one sitting right here. We have weaker dollar and upper bonds. In theory, at least some upwards. S&P 500 in support, bouncing back. Oh, you're a guy that I want to pick your brain, Maurice. I like the way you're thinking, man. You're one of those guys that understands all the fundamental stuff that really help to shift the market. You're the kind of guy I'd like to pick your brain. I love listening to fundamental guys because you guys got some really interesting points of view. So here's our fair value gap fill. Now look for this range here. If this one holds, look for that range back up into a breaker or order block. See how we're hitting off this order block here? Continuation on the downside. We're in a smaller range now, so this could be the next price leg up again. So we could be looking for something like this. Run up here, back into rejection block above us. We need this order block here to give way to start running up for the next potential price leg higher. If it doesn't give way, this rolls over and comes back down. We're looking for more discount inside here, inside this range. So keep your eye on that candle. What else we got here? I like this Maurice guy. You're a brave man for doing this live. For 6 months, 7 months I've been doing this live, my friend. Once you just watch the price action going from candle to candle to candle, and then you extrapolate that upon higher time frames, hourly, 4 hour, daily, weekly, you'll start to see some clarity in the technical side of an algorithmic theory, unlike you've ever seen before. Absolutely unlike anything you've seen before. So if we take this candle right here on the upside, we're between this guy and that guy. Right now we're still here and here. We have to break these candles to the upside for me to start going, this could be our run up. We want to see these get validated. If they don't, we're still coming down. That one's valid. Look for this order block. We've hit it multiple times, so you have the body left now, and you have the mean threshold. Break the mean threshold, and then you got the next price leg up. If you just wick through it, we want to see a body close above this. Otherwise, we're still going discount. Do this live. You not follow spot market? Nope. No, I don't, my friend. You're going to get so frustrated. You're going to go, this guy has no idea. This is so wrong. It's going to fly in the face of everything that you've ever been taught. I can tell just by the way you're writing words, the way you're writing your sentences and your form. You're going to go, this is just too frustrating to watch this kid do this stuff. Think he's trading demo account. Yeah, I'm totally trading demo account. I'm totally I'm never going to trade live account in front of you. It'll always be demo account. If you can't see price action working here exactly the same way as you do on your live accounts, your focus is not on trading an algorithm or trading technicals. You're worried more about whether or not I'm valid in what I'm saying, or I'm true, I'm a person to look forward to discount or disbelieve, or your focus is in the wrong place, man. It's totally in the wrong place. Thank you for the answers. You're welcome. Christopher, if you check the 30-minute, you'll see BPR. That makes it hard for me to anticipate a significant move. Technical, your mic is too far away from you. Yeah, no, it's because I'm reading over here. I'm reading my chart over there. What people are saying over there, that's why you can't hear me. Like longs, bank traders and hedge managers keep only 1 hour looking at a day for some times. Okay. RSI isn't moving. I'm not touching this. Feel a breakout is coming. All right. RSI indicators. So was I full of crap? Did I not call this coming down into a discount array inside a small range? I was lucky, right? Just lucky. Just lucky. They do not use candles, only strips. Here's your discount array. We're still below here now. I like this. Now if we get on top of this, we've run back into a discount array. And nobody's trading this. We're just reading price action, you guys. There's no money on the line here. 62% retracement. We get above this now, find some support above that, then yes, I'm starting to go longer. And I have a meeting to go to shortly, so I'm going to have to peel out of here in the next little few minutes. If we find support inside here, you see that right there? We find support at it. We roll over, come back down into a deeper discount. $62%, that's a nice little good return to discount to look for higher prices. Keep your eyes on this, guys, right here. Keep your eyes on that level right there. And notice our swing point here. We have a swing below these lows. Come back up inside it. Look at this. 62% retracement. Puts you right on the money. So what you want to see is more upside. You want to see this break through here. Get on top of it and start really pushing now. Leave this open. Keep going, keep going. Where's my carrot? We're going to show you guys, you retail people, some real secrets about the market. It's all beta carotene, my friends. So we've got a wick above. We want to get a body above this here now. And you pay yourself at the rejection block, pay yourself at the breaker or the mitigation block. We're back to this order block here. If we don't break that high, again, continue to look for lower prices. Now we're digging into that more. Now we've got our discount array finished. Look for this breaker here. It's a senior array, so it's a senior candle. See if it provides a level of support. See how I love it? Just taps it, and you get a reaction off of it. If it drives through it, I'm all right with that too. Then you're looking for downside. Look for this next array here is your body. Snap off of it. Let's go. Let's go. wondering about the downside? Bank traders and hedge managers keep only 1 hour looking at the 1 day for sometimes. Yeah, when you're into banks trade on days, and they try to trade on big figure points, like big figure levels, 18,200, 400, 18,000, mid figure levels, institutional levels. There's your mean threshold. And you guys were saying you're going down? You're going down? Hells yeah. RSI isn't moving. I'm not touching this. I feel a breakout's coming. So when you say you feel a breakout's coming, invest. Tell me, where's the logic behind you feel a breakout's coming? Like, something's in your mind is seeing something that you haven't been able to say a specific point. This is my problem with fundamental analysis, is it doesn't give you precision entries. It doesn't tell you exactly where it can say, you need to buy here. You need to go short here. You need to go long at this candle, at this point. Look right here for support. If you don't get it there, you're going lower. You've run the lows now. So back when you were saying you're going low on that, yeah, there was nothing that would continue to provide support above other than the candles that were marching up, providing a level of support, and continued to march down. We found inversions that were still being supported to the downside, and you stay. I'm still bearish on this until proven otherwise. And you don't get bullish on this until we start breaking above this candle, get some support at it. Now that we've swung this low, you look for the inversion and the change in direction. I know it sounds too simple, but stick around. You'll see some interesting stuff. So yeah, I'd like to know where your RSI indicator. I've played with RSI indicators in the past, and I spent a lot of time. I even tried to develop bots around using RSI indicators and moving averages together. So watch this. Now we've just taken this swing below this low. Look for this candle here to get taken out on the upside. If it doesn't get taken out on the upside, with a full body close, we need a body candle close above that with a sense of urgency, then come back into it. Then I'm going to say, now look for your higher PDRAs. So you just watch and watch. Tell me what your RSI indicator is telling you. Big bull candle, 7, 6, 5, 4, 3, 2, 1. Bing, bull candle. Now turn around. You can come back down into that little range right there. If it continues driving through, wait for your optimum entry. Your entry is right in here. And you're aiming for a higher PD array, and the only PD array you got above you is this fair value gap and that order block breaker. Last up close candle before a run below this little low here and that little low there. So that's a senior candle. It's going to provide a level of support right there. You see that? Bink, off of that. Now come back down into this level here. Or this, and we have another imbalance we can revisit here, I suppose. We want to see this breaker start getting pushed through. This fair value gap, you want to see it get eaten into, this mean threshold going. But ideally, we want to get back into here before we eat through all that. Because if you're looking at your range and you want to try and get some quick profits, and you're running for this mean threshold and the fill of that fair value gap, you want this candle to come back into here to grab you into your trade to take you long. If you get it here, then look for whatever swing point occurs here, take yourself some profits and take yourself some profits. These are quick snaps for money. Fair value gap. What time are we sitting at here? 16, 12. Right into that imbalance. Come on down. Just give us a little nudge in here. I gotta go. Got a couple of minutes left. Keep your eye on that level. I want to answer a couple of other questions before I take off. They use candles on strips. Technical. I need volume to 100 to hear you. Oh, you can't. Can you hear me now? Can you hear me now? If you're using trend lines, you will be much better. I don't use trend lines. I don't use trend lines. We don't use trend lines. We don't use Bollinger Bands, MACD, Elliott Wave, none of that crap. Sorry, it's crap. And you're not going to like what we do here. I guarantee you, you're not going to like it. What's the purpose of the carrot? That's just our little mascot. That's just something we've kind of just played with, saying whenever I want it to go somewhere, I like to move the carrot in a direction, and if it comes to, we're all kind of rooting for the carrot. It's just something to look at, entertains us while we're getting our trades. The RSI is flat lining, so felt a move was coming. I was leaning short from the price action of the candles and a failure to go high. RSI. Be nice, you guys. I don't want to see anybody dissing anybody here. Don't laugh at his RSI, Richard. That's his thing, man. You got to respect that. I don't want anybody being mean to anybody in here. That's not what we're about. I fully respect what these guys are doing. Their techniques, whatever they're mastering, I love it. I love what you guys are doing. So just keep doing it. If it's working for you, stick with it. It's not what you'll see us use here. So if that's what you're looking for, we'll never confirm your RSI. We'll never confirm your other stuff. It just isn't going to happen. So if this is the entry, stop losses down here. Now your fail safe is going to kick in. So right there is an entry. And if we trade below it on a close, before you hit your stop loss and it trades back to it, that's the fail safe. Right now we want to see this go. So I want to put the carrot up here. The carrot's just a something for you to look at where I think it's going to go. Look for paying yourself your first little piece here, and as soon as you get your RSI, you got me saying RSI now. So watch 14 seconds, 13 seconds. Watch where we close below here. If your stop loss is here and it rips through, then you lose your stop loss. If it doesn't, you got rejection block right there. Come back, get yourself out right there. You break even, wait. We've closed below, so we're coming down. Move sideways. We've traded below our inversion. So it cost us nothing for this trade. We're looking for here to go long. Body trades below it. As soon as it trades back into it, you get out of your trade, move to the sidelines and wait. That's not a clean setup. There's your rejection block. And you'll see this over and over again. So those of you who stick around, invest. If you stick around, you're going to see this. You're going to see how these levels provide a support, and you start getting your upside run. You'll see the downside turns, and you'll see none of the, and then if you want to try and tie it into your RSI indicator, and this helps your RSI indicator, if you understand your RSI indicator a little better, man, I'm happy for you. If this can help you, what we're going to show you here, if it ties in your RSI at specific points now, and it makes it more of a clean entry, man, I'm happy that we can help you out. If not, you're not going to see your trade pan out with what we're doing here, because you won't see me using any of those other trend line stuff No indicators. There's nothing on here. This is pure technical stuff. So this is our reversal. Stop loss was here. That was my fail safe. It got me out. Once again, this is the time the fail safe didn't work for the trade to pan out, versus it just saved me as a break even. So I moved to the sidelines with 0 loss. And those who did catch that on a run, you're now in profit. Now move your stop loss into, now that you've taken out a piece here, now look for your a little bit of profit. Move your stop loss into above your level here, and now you're in profits. So there you go, you guys. Maurice Invest, you get to see a little minute by minute, calling it where it goes. Now you may say, oh, that's all lucky, that's all BS. I don't care. That's fine. Stick around. I'd love to help. I'd love to see how you guys do your stuff and share your knowledge with us. And people are going to be nice to people in here. If they're retail traders, I insist you be nice, or we're going to punt you. I don't want any trolls in here. You got to respect everybody's trading styles. You got to respect how they do what they do. These guys come in here with some awesome knowledge, and we need to respect that. So I fully respect that. So if you can help me tie in an RSI and help me understand an RSI a little better, I'd love to see it. Okay, I'm coming right now. Sorry, I got to go, guys. I love you, and thanks, Invest, and thank you, Maurice, for sharing your knowledge, sharing your stuff with us, man. I really do appreciate it. No one's here to bash you. I fully respect what you do, but just give me time. Come back again, and just give me time to show you some of this stuff, and you can keep your model of the world. I totally respect that, but come back and let me show you some more about what we do here, so you can either totally discount it and move on and continue doing what you're doing, or find a way to help it enhance your trading and help your trading style. I'm looking forward to that. So until then, I got to go. I've got to get to a meeting with my wife here. I love you guys so much. Thanks for popping in. Invest and Maurice, thank you for your inputs. I really do appreciate it. You're welcome here anytime with whatever beliefs that you have. I 100% respect you. Okay, so thank you so much for popping in. For the rest of you guys, I love you. I will see you tomorrow, bright-eyed, bushy-tailed, tomorrow at 9 o'clock. Thanks again.